right, good day. It's Sunday, June 12th, 12 noon, New York. In Europe, I see, good to see Alexander. I think it's 6 p.m. where you are. Jim Walker, I think it's 5 p.m. where you are. Man, we got a great room already. Jim Walker, K-Fab, Alexander, expecting a bunch more. You guys are the best. You make this room the best. I keep saying we have the best room, and it's not because of me. It's because of you guys. We have the best speakers, the best content, the best analysis, the best moderation, and the smartest audience. And with each passing week, it becomes ever more apparent to everybody who goes on FinTwit. We had a room yesterday. It went on about 3.5 hours, much longer than I anticipated. I go away for a week, and so much happens. Mr. Market doesn't know and doesn't care what my calendar is. Stuff always happens when I go away. Get long volatility when I'm on vacation. So maybe I should post my vacation schedule as a trading aid. So I don't know really where to begin. I jotted down some notes. I have so much to talk about. So we're going to keep it moving and keep it light. I don't want to go down rabbit holes. As you guys are all aware, I loathe to speak about Tesla much or crypto much. We made a mistake yesterday of going down the Tesla rabbit hole. I thought it would be informative. I listened to the replay. It was a complete waste of time. So if you listen to the replay on YouTube or Apple or Spotify, you'll see that the whole Tesla conversation got taken out. There's 30 minutes of waste. Very polarized topic. The bulls are dug in, the bears are dug in, and there's really nothing new. My price target for Tesla at year end is 200. Stock closed at 700. I don't know how, I don't know when, but to me, Tesla's been nothing more than probably the biggest symbol of excess liquidity in a narrative-driven market. And anyway, I don't want to spend much time on Tesla. Enough already on that. So, a lot of things to talk about. Yesterday, we started off by taking the integrity of financial media and FinTwit to task. I replayed a 6-minute link highlighting some of Jim Cramer's biggest hits or biggest lows. Not to pick on him, but he probably is as visible a figure as any in the financial media. He's a Harvard Law School guy, formerly worked at Goldman Sachs. He knows better. And the issue here is not his mistakes. We all make mistakes. As I've said many a time, if you're any good in this business, if you're good in this business, you're still wrong 40% of the time. This is a very humbling business. What I take issue with is not Jim Cramer's mistakes, but the sort of blitheless manner in which he jumps from one disaster to another with no accountability, no transparency, and if one bothers to keep score, one is accused of trolling. I'm sure you're all familiar with the phrase, you got to talk the talk, act like you own the place. Well, that's the way Cramer rolls. And he has caused untold damage, billions, hundreds of billions of damage in investor portfolios. The record of his charitable trust is abysmal. He's an entertainer. He's not an investor. And he's not the only one. Raoul Pal, Chamath, Kathy Wood, go down the list. But I just am blown away by the lack of remorse, the lack of humility, the lack of accountability. Someone sent me a tweet last night. I think Kramer put something. Someone said, "Oh, gee, he's not tweeting much today." And apparently, I think he sent out a tweet last night. There's absolutely 100% no chance that we're going to have a recession. Okay, Jim, whatever you say. So there's that. I want to come back on the inflation number from Friday. That was a big deal. For those of you that have been in this room, you know where we stand on this. You can go back. I'll retweet it later, as early as I think January, February of this year. Stephen Roche writing a great article about why inflation is not transitory. And Stephen Roche, former Morgan Stanley, I think chairman or vice chairman of Morgan Stanley America, having worked with the Arthur Burns Fed back in the day, he was there. He knows of what he speaks. And Henry Kaufman also speaking from a similar playbook. explaining why inflation is not transitory. I think bond yields are at 175 now. They're at 315 as we speak. Remarkable thing about the crash or the horrible performance of the equity markets on Friday was bond yields actually went up to 315. No 60-40 model for you, boys and girls. At any rate, the street has been completely humiliated. I don't know how they can show their face in public. The rates, while they're going up, are still highly stimulative, well below the nominal growth rate of the economy. This idea of transitory, we can argue about it. I like Jim Bianco's definition the best. And I hope Jim comes into the room. I invited him. If anyone knows him, please reach out to him. I'd love to hear from him. Jim's point being that what team transitory would have you believe. Transitory is the idea that if you don't do anything, inflation will just go away on its own. And I think that's the best definition of transitory. Rather than arguing whether or not inflation is 8.2, 8.8, or is really 14% if you properly account for it, as I believe it is. And therefore, you don't have to do anything. It'll just go away. Well, they're going to have to do something. They are doing something, and the Fed is leading from behind. I think there's a Fed meeting coming up this week. I think consensus 50 basis points. I don't want to get into a debate about the Fed's going to do this, the Fed's going to do that. The Fed, to a very large degree, is irrelevant now. They're not driving the bus. They're in the back seat, and the market's dragging them. And so the idea that, I think we probably will get a recession out of all this, because the longer, they need to, by definition, it's a closed system. Demand has to come down, aggregate demand has to decline in order to free up capacity and resources to alleviate pricing pressures. And there are certain pricing pressures for which the Fed can't do anything. So, for instance, we've said this many a time, they can't drill for more oil, they can't grow more wheat. Now, can they stop people from going shopping at Target and Walmart? Yeah, sure they can. And they're already doing it because inflation is going up so much, real incomes are collapsing. So the point of it is, rather than getting into debate about it's inflation, it's deflation. I hate those debates. It's or is it transitory, is it not transitory, or some guy's going to want to argue about the curve's inverted. No, it's not inverted. Well, it's a 2s, 10s, it's a 530s. That's all IQ contest stuff, which is nonsense. We're here to try to make money. And if we're talking about risk assets, I've said this once, I've said it a million times. You can go back and look at the podcast I did with Jack Farley of Blockworks about a month ago. Flip a coin. The Fed does something, or rates go up sufficiently to dent inflation. Okay, that's recession. That's not good for the stock market. Fed doesn't do anything, stays behind the curve. Inflation just keeps cycling up. You're going to get a recession eventually anyway, but as purchasing powers get crunched, that's not good for the stock market. So door number 1's no good. Door number 2's no good. Door number 3, which the bulls rely on, Goldilocks, that door is closed. It's been sealed shut. So, stepping back, and there was a stream I put out about 2 or 3 weeks ago. I'll retweet it. I'll refer to it later in the discussion. I think equities are completely toast. I'm talking about the indices in the main. Yes, there are pockets that I've remained positive on. I've backed away from my like of energy on a tactical basis, just because I think we're coming up to the point in the market where you could have an everything off type of market, risk off type market. That the dream of transitory inflation has now vanished, and so I argue for people holding cash, owning companies with strong balance sheets that are price makers, not price takers. Basically, take less risk. And the problem now is it's not just rates are going up, but you're going to start to see credit spreads widen. And as you see increasing distress in certain asset classes, you're going to see a liquidity suck. And you're going to start to see real distress emerge. And so I'm kind of chuckling to myself watching Ethereum and Bitcoin meltdown this weekend. And who knew? Who could have possibly predicted that? So the wagons are circling. We had a great discussion yesterday led by Shrub. I hope he comes to the room. Again, on the flows data. It's remarkable how fund flows continue into equities despite the carnage. hugely, hugely, hugely bearish. These are things you don't see at the bottom. These guys will puke before the market makes a low. So, I think there are much, much, much lower levels ahead. As I've said many a time, we don't try to call the weekly and daily jiggles, zigs and zags, and some smartasses on Twitter try to call me out when I get it wrong on a weekly basis. It's just not of interest. The real money has been made on the short side and long energy as well. That's the investment. All the sort of little tactical trading longs and all the other nonsense, that's just noise, in my humble opinion. So far, it's proven to be right. Who knows? I'll probably be wrong at some point. Another log I want to put on the fire. Let's see. We talked about Jim Bianco. We talked about crypto, flows and positioning. Let's talk about Tiger and venture capital. Just before I went away, I tweeted out some things on Tiger and venture capital. And Chase Coleman and Tiger, it's kind of like Kathy Wood and Arc on steroids. Imagine you're in Kathy Wood and Arc, but the companies are even more overvalued, and you can't get out, and they're loss making, and they need more money. That's Tiger Global. I don't mean to pick on them, but I will. Just sort of the lead dog in the whole venture capital world, private unicorn investing. I don't have the tweet in front of me, but from memory, I think something like in 2017 they funded 16 or 17 deals. In 21 they funded, I think it was 361 deals. For any of us who follow banks, when you want to figure out where the next disaster is going to be, it's always you look to see where's the biggest excess occurring in terms of investment or credit expansion. And venture capital and unicorns, that's it this time. That's going to be the real rub in this cycle. And the interesting thing is, whether or not the asset decline becomes generalized enough that the banks fall into question, that's possible. But their capital ratios are much stronger than they were in past cycles because of all the regulatory fallout stemming from the great financial crisis. The banks are made relatively bulletproof. Doesn't mean I like bank stocks. No, I don't. I think we are getting a recession eventually and credit quality will deteriorate. But that's not the point of greatest weakness, at least now. It may ultimately be, but not now. So if you see venture capital investments, unicorns going bust, you see crypto going bust, that's a good thing. I mean that's a good thing because that's part of the healing process. This nonsense, investing in fairy tales and narratives, has to stop. It will stop. It is stopping. And even without the government doing anything, the regulators doing anything, Mr. Market's taking care of it. I made the mistake of going into a Clubhouse Bitcoin room this morning. I hadn't been in one in months. And I went in there just to sort of gauge sentiment and maybe thought I might learn something if I missed something this weekend because I saw the debacle. That's in process. And it was hilarious. I went in, I think Bitcoin got down to, 26.5 or something like that this morning. Just having literally fallen out of bed the last few days for those of you that are following it. Let me just pull something up here. I can give you a more precise. Here we are. So Bitcoin was 30,000 on at the close on Friday, and it went down significantly yesterday and again today. And as we speak, it's at 28.1. So that's down, 6%. It closed on Thursday. It closed at 30,161, and now it's 28,100. So, as my Brit friends would say, it's a useful decline. That's 2,500 points, or 8% in 2 days of trading. And today I happened to go into the room. It was momentarily at 26.6. I think was the low, and now it's 28. So it's up 1,400 or points, or 6 or 7%. And I refuse to go in the room to speak because every other word out of these guys' mouth is a 4-letter expletive. And I don't really feel like serving as a human pinata. I'm there for a constructive exchange of ideas. But these guys are so profane, so vulgar, so delusional. The fact that I was met with profanity, I should mention, I didn't speak in the room, but Clubhouse has a new feature where there's a chat feature at the bottom of the screen, which actually I think is quite useful, and I hope the people in Twitter Spaces do the same thing. And so you can have a back channel discuss. It's a public discussion; everyone can see what's going on, so it's like a mass chat. So I started putting some things in the chat, and there was nothing. I was met with nothing but a string of four-letter words out of these guys' mouths. I hadn't been there for months, and hopefully Marc Cohodes, my good friend Marc, will speak on this shortly because he's had his fair share with the AMC crowd. At any rate, they start ridiculing me. It was very revealing. Clearly, they were in a world of hurt. But what I found remarkable, was just how detached and delusional these people were. Peter Atwater, we've had in this room, talks about why do people do stupid things. These guys still don't get the joke. So you're saying there's a chance. You got to be buying it right here at 27,000. I'm like, okay. I mean, to me, Bitcoin in particular and crypto in general, it's complete. Let's back up. I believe much of this crypto bull market has been underwritten by the massive, widespread counterfeiting of stablecoins, most notably Tether. We'll go into that later, but I don't want this to devolve into a crypto room either. And when you take Tether in circulation from 2 billion to 80 billion, don't have to think too hard about what that might do to the price of Bitcoin and other crypto assets. And of course, that's the elephant in the room nobody wants to talk about. And for those of you that haven't heard me, I did a couple of podcasts with Grant Williams, and one in July of 21, and then one 3 weeks ago, a revisit. And Tether is the big shoe to drop. I think it's going to be a complete nuclear event for crypto. So at any rate, these people still don't get the joke, and they're still in denial. As the saying goes, denial is not the name of a river in Egypt. And if there was more humility and despondency, and these are reading stories, I don't wish on anyone of people, jumping out of windows because I lost everything in crypto. Maybe we could say we're approaching a bottom, but hell no. This has got a long, long way to go. One or two other points that I'm going to open up to Q&A. This has been an unusually long monologue, but I've been told by a lot of the DMs, people like when I rant. Although I have to say I'm maybe having enough caffeine this morning. I'm doing it in a rather humble, modest, low-key voice, not elevated fashion. Let's not lose sight of what's going on to the yen, Japanese yen. Oh my God, we went out at 134 and change on Friday. Let me just pull this back up. You have the world's largest creditor nation, whose currency is collapsing as if it were the Turkish lira or the Argentine peso. Since May 30th, I'm just looking here at a chart. Since May 30th, the yen's basically on a straight line from 130 to 127 to 134. And this is extremely important for a whole bunch of reasons. Volatility, going from currencies to fixed income to equities. And the Chinese and the rest of Asia can't be happy from what they see. And I'm sure it helps. The Chinese are taking note, and it's informing them about what they may want to do with their currency. And so, again, when I go back to the oft referred to phrase of the triple demerit scenario, for those of you that weren't around, the triple merit scenario in Japan in the 80s, I was a young buck at the time. I thought I knew what I was doing. I couldn't do then. If I knew then what I knew now, I would have done it. So youth is a wonderful thing. But the Japanese bull market, one of the greatest bull markets in history, in the late 80s, was driven by the so-called triple merit scenario. You had the troika of falling oil prices, a falling interest rate, and the yen, all conspiring to rising yen, actually, all conspiring to push the equity market up. Why was a rising yen a positive for the Japanese stock market? Because as the yen was appreciating, that acted as a deterrent to capital flowing abroad. and instead it got bottled up inside of the Japanese financial system. And that caused one of the all-time great epic bull markets. The Nikkei peaked at 39,000 on the last day of 1989. A few years later, it was at 7,000. And here we are years on, and where are we, 24,000 or something like that. That's a real bear market. And, sorry, 27,800. That's a real bear market. What is missing so far in the public conversation, in the public square, is the concept of time, not just price. Someone said in these rooms a few weeks ago, time kills you more than price, because time is what grinds you down and really diminishes the spirit and kills the animal spirit, and particularly kills momentum investing. So coming back to Japan, we've got a currency crisis on our hands. The Japanese, so far, they know full well what they're doing. They're the last major central bank that's insistent upon maintaining easy conditions, while the rest of the world is starting to tighten. Also, footnote, we did have the ECB late last week, and they're making noises about starting to be really worried about inflation, raising rates. So the whole rest of the world's raising rates, and these clowns are still staying easy. We're like, what did you think was going to happen? And I think it's really interesting because, think about it. The old line, never rely on the kindness of strangers. Well, the one thing about Japan, say whatever you want, they run a current account surplus. They're not dependent upon foreigners investing in their market. We are. So what our currency is doing, what our bond market's doing, is we need those capital inflows. And when you have real interest rates which are way out of whack where they've been historically, some of the lowest interest rates in recorded history, and a central bank which is woefully behind the curve. If you were a foreign investor, unless you're in a place like Turkey or Argentina where things are completely out of control, or it kind of takes away your incentive to want to put money here. Or you take a look at what the U.S. government did with the Russian money in the banking system, and it's like, whoa, wait a second, is the U.S. as safe a place to invest as I thought it was historically? So they're playing with fire here. And so watch the yen, watch the RMB, the ECB we talked about. I think I put enough logs in the fire for now. So that's longer than I usually go, and let's get into it. I invite, if you got a question, raise your hand. KFAB, I'm always, you're a sharp cookie. I'd love to hear from you. What part of that you agree with, disagree with, whatever you want to talk about. And if anyone else, please come on. KFAB, good morning. Please unmute yourself.
Good morning, George. Sorry I missed the call yesterday. Looked like a humdinger. And hope you had a good time on your vacation. The only thing I largely agree. We've been simpatico for the most part in recent months. The one thing I'll kind of throw on, another log I'll throw on the fire, I wrote about it a few weeks ago, or a couple weeks ago, I guess now, is as far as, as you know, when the tide starts going out, we start getting things popping up. And one that I don't see discussed a lot is the potential for the Swiss National Bank having issues. They're another one of these entities that got into basically the hedge fund business or private equity business. You get all this mission creep late in these bull markets where people start doing stuff that, probably isn't a great idea, whether it's, and you covered several of them.
Well, KFAB, wait a second. Joke coming, alert. You mean you're questioning the wisdom of their having bought AMC and GameStop? Is that where you're going with this?
just leveraging their balance sheet. Yes. I mean, I actually dug into it a little bit. I mean, there's this question about whether central banks can actually go insolvent. And obviously they can print money, but that has ramifications relative to the currency. And I think people have started to get switched on to the yen issue. But the Swiss franc has not been behaving as it normally does in a risk-off environment either. And I think that has something to do with, what they've been up to. Obviously, since, the peg to the euro having become a bit of a mess several years back, and then, subsequently turning the balance sheet into basically a hedge fund. So, I just think it's another area to kind of just keep your eyes out.
Okay, if I can interrupt, So I'm glad you raised the point about potential central bank insolvency. Of course, the taxpayers will write another check to plug that hole. And you're sharper on these Fed things than I am, so maybe you could correct me here and elaborate. Did I see correctly a couple weeks ago? There were numbers being thrown around. I think the Fed, the U.S. central bank, is like 300 billion, 330 billion underwater or something like that. And historically, profits that the Fed would make would be sent over to the general treasury or whatever.
Treasurer, yeah.
But the bigger thing I'm concerned about is not so much are they going to be sending over 300 billion, or do the taxpayers have to write a check for 300 billion? That's not the issue. The issue is when you start to see stuff like that, the headlines, and it gets into investor psyche. I mean, you want to talk about. I mean, we usually try to stay between the 30-yard lines in these rooms. I don't want to go to crazy scenarios like it's just not helpful. But you know, like the road to Weimar, the road to losing complete confidence in fiat currency. When people start saying, "Oh, wait a second, the Fed's now lost 300 billion buying bonds, and who knows, maybe 600 billion a few months from now," and wait, the only reason the only reason the bond price is the yield is only at 315 is because they were buying all this crap. Wait a second, where would the yield be? Where would the bond price be had there not been this artificial market? Oh, so you mean the real clearing price for U.S. bonds is 4%, 5%, probably the 10-year Treasury, and then plug that in your dividend discount model, and for $50 in double jeopardy, tell me what the PE on Tesla is. All right. So could you speak a little bit to where the Fed is in this, and also I love your articles. And by the way, I urge everyone to follow KFAB. He writes a great Substack. You're a really good thinker around these macro issues, and I just think that these types of headlines that starts to get into investor consciousness is really, really, really going to undermine the credibility of and confidence in governments and fiat currency, pouring gasoline on the fires. Any thoughts about that, KFAB?
Yeah, well, I think that's a broader issue. I mean, that in my nerdy complex systems way of thinking about these things, it's almost like a fractal of the broader decline in confidence of institutions. And God knows that the institutions have, and the people running them have earned that to a large degree, whether it's response to COVID or, the crony capitalism coming out of the global financial crisis, no one getting prosecuted. The dual, we just saw it with Pelosi's husband. There's people are awakening up to the kleptocracy. And that's really the reality of what, the times that we're living in. And so I think that the Fed is one of the kind of last institutions where people have had this flawed, almost like Wizard of Oz confidence in them, that they have like these, and the pull-up bureau of only effective pull-up bureau of managing the economy, as if they actually have that power, and not only the power, but they're good at it. And I think that that's really what we've started to see in the last 12 months. We now have the apology tours that are taking place. But as you've said, it's the open mouth operations. Watch what they do, not what they say.
Yeah, and KFAB on that last point, help me on this because I don't pay attention. I'm not really a Fed watcher, but if I understand, I mean, it was even through last month, they were still buying crap. Do I understand it's only going to be like this week is like the first week they're actually going to start selling some assets? Is that right, KFAB?
Yeah, I think this week is when they start. I don't even think it's start selling. I think that they just run off. I mean, they're basically going to stop.
Yep.
Reinvesting proceeds from fixed income instruments that are maturing, and that's there was I think it was a Substack that went kind of viral this week on someone in the mortgage market, basically talking about how MBS went no bid on this week, the real bloodbath late in the week with the CPI data. So you're already starting to see the market kind of convulse, and so I think we're at the stage now where it's interesting to start talking about spreads widening, not so much because treasury rates are going to go up, and they may still go up to a degree.
KFAB, I don't know what just happened, but you're kind of in the matrix. Something just happened on your voice. We're having a hard time hearing you.
Sorry about that. Is that better?
No, it's not. You're very tinny. I tell you, hold on. Say it again.
I'll come out, come back in.
Yeah, come out and come back in. I'm going to
Yep.
move on to some other while you come back. So I'd like to go to my good friend Marc Cohodes. I haven't talked to Marc for a while, and then we're going to go to Mark Newman. So we're going to do Marc and Marc. Hey, Marc, good to see you. What's going on, man?
How's it going, George?
All good, all good. Living the dream, my friend. It's
That's right.
you're out in Sonoma, right?
I go between Sonoma, Montana, and parts unknown. So
Excellent.
I
Well,
just, I,
I
I
know
just,
you're a person of interest. You're in the federal witness protection program, so we're not going to be too specific about where
I,
you are.
I keep it
So
moving. I'm just
yeah,
not,
so
I'm
just
just
give us.
not welcome in Canada. No, I really enjoyed that spaces yesterday, but there were a couple things sort of that I think everyone's missing, and one is no one's really talking about hedge fund redemptions coming up for Q2. And though a lot of fun is being made of, the apes and Joe Sixpack, Chase Coleman and D1 and all these other clowns should be tarred and feathered and run through town in a weasel suit. How despicable their performance is. And it really turns out that all these guys are huge, over leveraged, fee generating entities to only benefit themselves. I mean, if you probably look at the weighted average returns of Chase Coleman after fees, after taxes, I mean, Madoff outperforms him.
Yeah, and Marc, just so you know, we haven't talked for much recently, but I've been on the case full time on my Twitter feed, and I've crapped all over him in a couple spaces. So I will give you all day, Marc. Please talk Chase Coleman to me because I can't think of any person who more justly deserves being roasted in the public square than Mr. Coleman. I think it's only a question of time. I saw something the other day. I believe from inception, they've given back 70% of all their gains in the last 6 months. And I think it's only a question of time. It's a question of when, not if. They will have lost money from inception. So if you want to go a little bit deeper on D1 and
Well,
Chase and all the rest, have at it, Marc.
it
We're
has
all ears.
it has broader reaches. I mean, so let's just say Chase Coleman and D1 and some of these Tiger Cubs, they're ready to get their heads knocked off. But what's going on, I'm hearing in the so-called professional spaces where allocators want money. All these guys have strict lockups, and you really can't get their money, and it's starting to roll over into hedge funds where you can actually get liquidity because no one's performing well. I mean, there's a few who are doing all right, but no one's performing well, and I think a lot of these allocators are going to want money back, and they're going to have to reach into funds which have more liquidity than these so-called tiger cubs. So I think the one effect that could start happening is these hedge funds who are over leveraged are going to have to start going to cash extra quick because I think the redemptions going forward are going to be severe. And I don't think people are really talking about hedge fund redemptions. And some of these names, which, as you know, are down a lot, could go down a whole lot more. So I think that's something that's out there. And it's a huge black eye for all these pension guys and advisors who give money to all these clowns just blindly. And I think that's going to have to become a much bigger topic sort of on a go forward basis. So
Yeah, Marc.
while
Yeah, Marc. I couldn't agree with you more. And let me just guide you just a little bit here because you and I are probably two of the guys with most experience in the room. It just strikes me. Forget about what's going to happen this quarter, this year. I think this is truly epoch making. I think this is a generational event, in much the same way that Japanese equity valuations reached levels in 1989 that have never been seen since, and I don't think ever will be seen. I think I think you've seen the type of insanity, and I know you know this as well, if not better than I. The levels of insanity that we saw in this bull run, never seen before. I mean, you and I are around in 2000, around 2008. Those markets don't begin to compare what we've seen here. And I guess what I'm trying to say, there's a question here for you, sir, is that this is a truly generational excess in insane valuations. We will not see this thing, I believe, ever in our lifetimes. I furthermore think, and you live in the great Golden State, you look at, I mean, CalPERS has been one of the most biggest investors with Chase, but just picking on CalPERS as a representative example, the idea that these guys are going to ever consider putting money in this into these illiquid, narrative-driven, valuation ignoring type of investments. I mean, I think it's not just Chase Coleman's going to go out of business. It's that I think this whole style of investing is out the thing window. I shouldn't have cursed because now we're gonna have to edit it. But no, but seriously, we are done for. I'm gonna put my neck here. We are done for years. We are done for decades. All right, and this is all healthy in my opinion, because this has helped underwrite the biggest malinvestment we've seen in our lifetimes, and maybe once and for all, the bullshit's gonna stop and we'll get back to real investing on cash flows and asset values. So I don't know what part of that you want to disagree with, agree with, pile on, but I just wanted to kind of get some gasoline on your
Well,
fire, Mark. Back to you.
I in general agree with all of it, and I always try to say, because I'm a stock guy, I'm not a macro guy, and I'm sure not a crypto guy. And anyone who asks me about crypto, I say I've never touched the stuff because I haven't had anyone explain it to me where it makes any sense with one, two, three, or even five sentences. But I think if we can get back, or the markets can get back to a good deals go up and bad deals go down, that's all I've ever sort of wanted. But the insanity that's spread around it, anything from the Cartoon Network to Kramer to, I say never watch CNBC, I'd rather watch roller derby reruns. I think what has to happen is some of these people truly need to be tarred and feathered and made examples of, so this shit never happens again. So I
Yeah,
mean
and Mark,
that's really the trick. The trick is if guys get charged criminally. I mean, Chase Coleman's probably taken what, 15-20 billion dollars or more out of his fund. And Plotkin, who's a complete disgrace, I mean, he's taken out God knows what, owns the Charlotte Hornets with D1. All these guys have taken, 5 to $50 billion out of these hedge funds and have returned jack shit to their investors on a weighted basis over time. Forget fees and forget on a tax basis. And see, you and I are stock guys, and we go back to the 80s. That's right, the 1980s, where if you could find a good deal, it would go up and up a lot, and bad companies went out of business. I mean, this shit that's been going on lately has been so insane, you stop even discussing it because it makes no sense. And the infomercial that's known as the Cartoon Network, where they get the Kathy Wood, disciple of Bill Wong, and religion and all this other bullshit going. It is laughable, fringes on criminal, and it all has to change. And it's the crazy thing is it's happening very fast, and it's happening in at great speed with hyper leverage, which is why these markets are so hard and so volatile.
Yeah, and Mark, let me just, I really would like to pick your brain a little bit here, because you and I have a very similar worldview, and there are very few folks with the experience and standing of yourself. And so I'd like to kind of go down memory lane here a little bit. Let's talk about Miss Wood for a second. I don't think anyone's been harder on her than yours truly. I'm just appalled. There is no shame. There is no honesty. There is no integrity. I mean, you've run real money before, as have I. Mark, in what universe, on what planet could you imagine anyone, any person of good conscience, getting up and saying that they believe their portfolio is going to appreciate 50 or 60% compound for the next 5 years? What do you make of that behavior?
So Kathy is probably not a dope, right? She's not some flunky or lived in the streets or anything like that. She was basically a nobody, but she's not dumb. She's flown under the radar for many years. She's not young. She's probably our age, George. but she
Yes.
was nothing. And then out of the blue, being enabled by this criminal Wong, she appears on her growth thing, her arc, whatever that's called. And it's perfect timing, crazy stocks, hyper growth, low rates, growth environment, and it plays. And it played like, Garrett von Wagner used to play. And people who are new to the program, Google him. I mean, there's always these red hot people who come up and have huge returns for a very short period of time on not a big money base. And then they get big, and the enablers, and I think the key here is the enablers. She clearly has hired financial PR firms to promote her, and the financial PR firms promote Cartoon Network and the media and things like that to write about her. And she gets huge inflows, and she plays it on a concentrated basis. And there is no punishment. There is no punishment for her popping off and promoting her things and making crazy statements. See, there used to be a time when you and I were half our age where we would be petrified of the SEC, right? If the SEC sent you a letter or someone got investigated or they called you up and said, please, I mean, I've been investigated so many times, it's not even funny. But there used to be a time where you'd be scared by it, right? Like if you worked at Fidelity, you'd be scared if the SEC sent you guys a letter. I mean, fuck, Vinnick was fired for talking his book on Cartoon Network and selling stock the same day. And he's a tremendous investor. So there's no fear in Cathie Wood. There's no fear that anything bad can happen to her. She probably doesn't have her own money invested in these things. And she keeps going. And she can say these outrageous things. And she can say outrageous things, pumping Tesla and sell the stock the same day. And no one says boo. I mean, you say boo, I could say boo, a couple people could say boo on Twitter, but there's no ramification. There's no adult supervising anything. So if there's no punishment for bad behavior or craziness, then the path of least resistance is to keep doing it. And that's the problem here. The problem is everyone has lost the outer marker or the guardrails of any form of road. When money was loose forever, everyone bitched about it. The shorts got buried. I mean, CNBC made a mockery of Fleckenstein blank years ago. He'll never appear on it again because people get tired of being made a mockery of when you're intellectually honest, and they see intellectually dishonest people, make a ton of money. So people say, fuck, if you're making a ton of money doing this, why not? And I think that's the problem. I think the problem is there's no adults supervising anything. And when you pop off on Twitter, you look sort of fringy. Worst comes to worst, you get sued. I mean, I've been sued so many fucking times I've lost count. And I'm not a defendant in anything currently. I'm actually a plaintiff in a few deals where I'm going to have some fun. But basically, it's been a adultless, lack of supervision. Say what you will. The crazier you talk, no ramification society. That's
Right. And so, Mark, this is really, I talked about this in a couple of spaces ago. This is sort of just another manifestation of the post-truth society in which we live. That the truth becomes whatever people say is the truth. Nobody does any work. And going back to Charlie Munger, Warren Buffett's sidekick, his line about incentives: you show me the incentives, I'll show you the outcome. I mean, people like Cathie Wood have all the incentive in the world to cheat, lie, steal, misrepresent, fabricate, deceive, and because she's making serious coin off of this. Meanwhile, those who call her out, you're inviting the consternation of the crowd. And also, you don't have what's in it for you or I to go crazy on Cathie Wood. Not a whole lot. It's a hell of a lot less than the reward she's going to get for being right. And so, you're no shrinking violet. Neither am I. And that is why and Mark I mean, you and I first got to know each other reasonably well 3 years ago. And I applaud your outspokenness, and I try to do likewise. People have to live with their integrity. This is why I couldn't agree with you more what you said earlier. If you see something, say something. It's like with the New York City subways, right? There's a general idea that polite people only, praise specifically, but only criticize generally. I completely disagree with that because if people aren't being called out for this bad behavior, it'll just continue. Now, ultimately, it'll stop because Mr. Market's going to come for them. But I've had people say to me, "Oh, you're trolling. You're this. You're that." Oh, wait a second. Wait a second. You mean, you mean the fact that I put up a tweet yesterday, Mark. You're gonna laugh. Jim Cramer on May 30th. It's in my feed. It's one of the most recent tweets. In fact, it was the title of the room yesterday. On May 30, stocks are gonna have a very nice summer. May 30. It's 12 days ago. And now he's wringing his hands on Friday. Oh my God. What they really have to do is raise rates 100 basis points to get ahead of the curve, blah, 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 blah. I mean, there is no shame. There is no accountability. There's no transparency. There's no consequence. It's lawlessness writ large. I mean, and I don't think that, call it, whether it's Gary Gensler or any of the other regulators from the ABC agencies, or it's Jerome Powell for that matter, and the Fed trying to try to instill some integrity in the financial system. They all got to grow up here, and they don't. And frankly, you can't sustain what's unsustainable. It's the old I forget what's his name, not Epstein, the guy from Carnegie Mellon. It'll come to me. That which can't go on won't. I mean, this thing is imploding, is collapsing under its own weight. And so, Mark, let me turn the discussion just a little bit. Could you liken this to your experiences in liquidity-driven bubbles? Specifically, let's go back to 2000, 2002, where what finally triggered the market collapsing was, and I'll go back to March of 2000. Remember, like it was yesterday. It was the Morgan Stanley Tech and Telco Conference. It was NASDAQ 5,000. And the market started down in earnest. And basically, we just got to the point, there was just so much paper that it collapsed under its own weight. And so could you just, and the thing, I mean, I don't want to say this too loudly, but I'm going to say it. I've said it before. I actually started thinking it's going to be true. The idea that just as the market didn't really let you get in on the way up here, it just kind of went straight up once they printed all this money. The corrections, was you go back a couple of years ago, I don't think we had more than 3 or 5% correction any given year. The market basically didn't let you get in. I'm starting to think the trick here is going to be the market's not going to let you get out. It's basically going to go straight fucking down. Now, who knows if that's right or not? I remember 2000 like it was yesterday. You had this massive counter trend, interlude rally in the summer of 2000. But even the best and the greatest, I mean, Stan Druckenmiller, he is the GOAT. I mean, if there was a Mount Rushmore for hedge fund managers, he'd be on it. And I'm sure everyone read his comments. He spoke at the Arizona conference earlier this week, last week. And he said, hey, bear markets are tough. I think it's going to go a lot lower, but there could be a counter trend rally, so I don't want to be short, blah, 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 blah. The trick might actually be that this freaking thing goes straight down. So I guess 2 questions. A, could you compare and contrast this to past bear markets you've seen? And how does this strike you as being different or the same? And then B, my outrageous suggestion that maybe the trick here is going to be the market's just going to go straight down. Because people talk bearishly, but as you look at the positioning data, and I hope Strub comes back into this room, they're positioned bullishly. So 2 questions: A, compare it to past bear markets. B, the idea that maybe the trick here is that people are going to be shocked by the speed and or the extent of the decline. Thank you, Mark.
So I'm going to date myself a little bit. So I'm going to be 62 next week. And I started at the Northern Trust in 1982. That's when I started out of college. But I worked my way through college as a brokerage assistant at Merrill Lynch as early as 1979. So I've seen it, and I've seen a lot. And I saw the stuff in 87 when my son was born, that mini crash where the government at first bailed out Soros and Steinhardt when we had that October fiasco. I'm sure you've seen that, George. We saw the Russian nonsense when Subprime collapsed about 3 or 4 cycles ago, crap in 2000, 2008. But what's very different here and something that I've never seen, and I just don't know what it's about. And I did a couple interviews, and the shit's all out there if you ever want to Google me. As I said, that it has the makings of a Frankenstein because no one alive has seen this excessive leverage in the market overlaid with hedge fund leverage, overlaid with ridiculously low rates, and now you have inflation. So no one alive has ever seen this cocktail, and that includes Buffett and Munger. They've never seen the low rates with significant financial leverage, both at the companies, the world level, and in portfolios, all mixed in with what's going on the backdrop. Now, when all the dot-com stuff blew, if you were short that stuff on the upside, you got buried, and you got buried before it all blew up. But there were places in the market where you could hide. Non-dot-com names were doing fine, and you could find places to hide. I guess now you could hide in oil or inflation, things like that. But I think where you're right is what people don't see is this thing going straight down, staying oversold, sentiment staying bad, and it just going down till everyone gets blown out, and stocks in general look really cheap. But the problem is, or at least the problem I have is, the volatility is so extreme, and they move names around so fast. If you're on the wrong side of it, and God forbid you're leveraged, you also get destroyed. And there's fear, and there's talk amongst this, these spaces calls or sort of on Twitter where people are bearish, but people aren't acting bearish. They're acting very complacent. And I don't watch Cartoon Network, but if I were to guess, they'd always talk now about whatever stupid guest they bring on. Is this the bottom, or what are you buying? It's not like how bad can things get.
Yeah, yeah, Mark. It's always like one of my favorites. I got to put money to work. I hate that.
Right.
Wait, I got to put.
What
Wait,
do
who
you
says?
want to do?
Who says you got to put money to work? No. And then somebody asked me the question. Says, "What should I buy?" I said, "What if the answer is to the everything bubble? This is the everything bear mark. What if there's nothing to buy? People like it's like mic drop. They're like, what?"
Well, it's just you mentioned Kramer, so I go way back with Kramer, and when he's on his meds, and he needs meds, he's a good guy, and he's fun to talk to, and he's not so bad, and he used to try really hard. He used to try really hard to get it right, but I think Cartoon Network has put something in his blood where he's turned more into a carnival barker and a clown show, and he's completely lost his way. And I sent him an email the other day, and I just said, just take a break, get your head on straight, and try to do the right thing for the right people, because you're really screwing it up, and you're losing a lot of people a lot of money.
Yeah. So Mark. Yeah, Mark. Let me ask you. So I know Kramer a bit as well. I met him, I don't know, 30 years ago at some Stock Ideas dinner with Byron Wien or whatever. So we kind of knew each other, and I actually like him.
Yeah.
I actually took him, believe it or not, people are not going to believe this. I took him to a Celtics game once. I'm a Celtics season ticket holder. And this was a playoff game, the 76ers against the Celtics, maybe about a dozen years ago. And he was very well behaved. And, he was being taunted by people sitting around us, so everyone recognized who he was. And it was unbelievable. At halftime, we go up to the concession stand to get a beer, and people are running up to us, go, "Booyah, booyah, Jim!" Right? And my question is more than there's really a point here. There's a question to you. He's actually a good guy. He's smart,
Yeah.
but I think he loves the adulation. He loves the cheering of the crowd. So Mark, and he loves the eyeballs, the hero worship. So a bunch of us. I'm not going to mention names, but Mount Cox is not in this room right now. There's a name. A bunch of us a year ago dotted the I's and crossed the T's and served up the tether bear case to him, and he just whiffed. And is it that he just has his adoring fans as minions, and he won't do anything to lose eyeballs, or is it corporate pressure from CNBC? Like, where did it go wrong? How did it go wrong, Mark, in your opinion?
Well, here's how I kind of see it is that anyone, you know this, George, anyone who does this at a high level or has done it at a high level, right? You included. There is no doubt we all have egos and we all have big egos. And you have to have confidence in what you do. Otherwise, you will get your head handed to you. Every time I make a bet, I think I'm going to win and win big. And people think I'm cocky or this, that, and the other. No, I'm not cocky. I have an ego because I've fucking done it. And I've done it for a long period of time. And you've done it for a long period of time. And we've done it without cheating and we've done it without fucking up. And we've done it. And the record is the record. Kramer has a huge fucking ego. Huge. He's also short. And short guys have other issues. And I think he is caught up in a loop, a negative loop that he just doesn't know how the fuck to get out of because he has not been this bad and this cold and this far off in a long time. So when you put excessive ego with horrifically bad results lined up in a corporate culture where he is the chief guy the Cartoon Network promotes, you have a very, very, very toxic mix. And I think he's caught up in this toxic mix because he's the only guy the Cartoon Network has who they can promote. He's colder than ice. He has a huge ego. He doesn't stop. He doesn't get off the train. He doesn't admit he's wrong. He doesn't own his mistakes. And he just keeps going. And when you put all those factors together with Joe Sixpack watching it, you just have a disaster. And
Hey, Mark.
again,
Yeah,
there's no adult saying just get off and stop the fucking crazy train.
Mark, let me ask you something. I'm going to tell you this story, the audience story, and I'll go first, and you can do yours. So I'm going to tell a story about when I got in a bad place. Probably my worst period professionally in my career. Well, not the worst, but one of the worst, certainly. And this was the first quarter of 2000. I started shorting stocks in the fourth quarter of 99, and I was guilty of a premature speculation. Don't you hate when that happens? So in any event, I got squeezed pretty hard first end of 99, beginning of 00. And it got to the point by February, beginning of February, I couldn't take it anymore. And I fired myself. What did I do? I went to my assistant, who Abe Eisenstadt went on to have a terrific career on his own. Young buck at the time, smart, learner, really high IQ, street smart, the whole deal. And I said, Abe, I'm firing myself. He goes, what do you mean? I said, well, I'm going away for a couple of weeks, and I got to clean my head out. And I'm putting you in charge of the portfolio. You can get rid of any position you want. I kind of took a lot of risk off before I went away, and you can do whatever you want. Don't do any major surgery here, but just sort of respond to things in the moment. I'll be back in a couple of weeks. I got to get my head clean. And this speaks to the concept, and I know you're familiar with this, Mark, the idea of mental capital as opposed to financial capital. We all stare at the sheets and we look at how much financial capital we have every day. But what's far more important is how much mental capital. I think I got that screwed up. We measure ourselves, usually the scorecard is financial capital. What's even more precious is mental capital. And unless you can go to a place where you can be quiet and you look at a screen, I think it was Einstein who said, the defective thinking which got you in that position in the first place is you're not going to be able to think your way out. So you got to make space. And it was only then I came back a few weeks later and I went to that Morgan Stanley Tech and Telecom conference I mentioned a few minutes ago. And I could see there was no participant bias because I had no positions on. And I go to this conference, and then one day out of the blue, was early March of 2000. Nasdaq fell 200 points. That was 4% at the time, and I'm like, and so it begins, and it did it again the next day, and it was only because my head was clean that I could see it. I hate when, and I'm sure you've been there. We've all been there, and people have to understand this. When your position owns you instead of you owning your position, when you're a passenger on the P&L of the losses that you're racking up every day, it doesn't work. So you have to step out. You got to create breathing space. And that's the only road to salvation. It's the only way you can figure it out. And what you're saying sounds like Jim needs to do that. And Marc, if this, could you just relate? Because I think we learn so much more in failure and in our losses, and it makes us human, and it makes us more credible. But I don't know. I want to embarrass you, but maybe you could share a story or two from your years of experience in the trenches, because you've gotten beaten up as much as I have, and just maybe I think it would really be helpful for the people in the room. This is not just human interest stories, but it's trying to help people to how do you approach market, how a pro at the highest level like yourself goes about doing it. Explain the importance of mental capital, and explain when you've been in a bad place, what you've done to get yourself to a better place psychologically. Thank you.
Okay, well, that's a good point. I'll probably give people more information than they need to know. So, I was never good at school. I was always told I can't. People always said no, never went to a good school, and I'm just a worker. And when you fail, and you fail big, and I failed so many times I've lost count, you realize, one, it's not the end of the world, and two, the people who really make it, and I think I've made it, is when you learn from your mistakes and you learn from your failings. And I failed as a young person. I failed as, I've done a lot of stuff that's really stupid. Never anything criminal, but you can be wrong, and wrong big, on many things. You can be wrong on the market. You can be wrong on names. You can be wrong on who you marry. You can be wrong on decisions you make. But what you have to realize is, if you can learn from where you fail and where you make mistakes, the really good people or the good investors, and really people learn from mistakes they made. So when my daughter was graduating the eighth grade, I was pals with her class. The kids liked me, and they voted me to be the commencement speaker. And I'm a little aggressive, as people know. And the board of the school said, "What do you plan on speaking about?" And I said, "I plan on speaking about failure. And I plan on speaking about failure, that even though you kids probably have gotten all A's, and you're going to all go to a really good high school and probably a good college, it's okay to take huge risk, and it's okay to fail, because you have to learn how to fail, and you have to learn how to deal with adversity. And the sooner you can deal with it, the better off you are." And the board of the school came back to me, 2 days later, and say, "We would like you to change what you're talking about, because talking about failure at a commencement program is not okay." And I said, "I won't." And they said, "Well, then you can't speak." I said, "Fine, no problem." So they had someone else speak. But I think if you fail in positions, if you fail in ideas, I've had a well publicized run in with Goldman where I ended up closing my fund, even though I was max bearish on various things, and the market collapsed. I view that as a huge failure. And I view it as a huge failure because I was the captain of the ship. Now, granted, Goldman did a whole bunch of stuff to ensure that the ship sunk. I can't do anything other than to blame myself. And I said, I'll never professionally manage a dollar of money again. I'll just do it for myself. And I've done fine. But I think the thing with failure, and when you fuck up, is you have to own your mistakes. B, you have to learn from your mistakes. And when you reach a certain age, and I'm at that age, you try to help others not make those mistakes. And you try to help people who you think are sharp not make those mistakes, and you try to give something back, and you try not to lose perspective. And one I can tell various stories is I have a disabled son. He's 35 years old, and he has CP, and he's smart as can be, and he's my best pal. And I manage his money, and I manage my money. I manage no one else's money, and he knows when I'm having a rough go, and he knows when I'm having a good go. And he always just says, never hang your head. And I look at the struggles he has, daily with what he has going on, and he gives me tremendous perspective to push forward and to realize what's important and what's not important. And money comes and goes, and you've made a lot of money, George, and I know you've lost a lot of money. And at the end of the day, it's your overall head in the complete tank, and you have to sort of keep it going. And one thing you don't do though is when you're making a series of bad bets and you're cold as ice, you just don't keep anteing up to the table. You need a mental break, and you need a break from the action, because it's a good way of losing everything. And sometimes it takes me 30 tries or 20 tries in the name to get the thing right. And I can lose, but one day you end up making big. So it's one, knowing what you are, knowing your failures, learning from it, having some level of persistence, some level of sense, and you kind of realize out there who you should pay attention to, listen to, and who you shouldn't. And
Marc,
it's a complex thing. And the sad thing is you don't kind of realize it. I think your age begins with a six, my age begins with a six. You don't sort of realize it. You don't realize it when you're in your 20s, 30s, or 40s. You realize it sort of when you're in your 50s, 60s, or 70s. And if you can help people get through it, which is why I give you a lot of credit with these spaces, George. You're not getting paid anything to do these. You don't, you're not getting paid $10 a head on these spaces. You're just trying to help people out, because you're trying to give back for everything you've done and everything you've learned. I try to do the same thing, but sometimes,
Marc, I have to say, I don't want to get soft on you, man, but I am so moved. I am so moved to hear you speak in the way in which you do. You are doing such a public service, sir, for sharing your wisdom and what you've learned over the years. You can do the investing public no greater service than this. And it's what I really regret is that there aren't more folks like yourself who, let's call them the older generation. Maybe not you nor I, because we managed to figure out this Twitter thing. But as I keep saying, a lot of the old timers, they've been canceled. Not canceled because of their political views, but canceled by technology. Haven't kept up with Twitter and Reddit and Wall Street Bets and all the rest. And so, I try to get my former mentor, Mr. Lynch, Peter Lynch, to come into these rooms, and Fidelity Compliance wouldn't allow him. I said, but Peter, your voice needs to be heard in the public square. And there are many others. We had Stan Weinstein in here a couple of months ago. We had Dennis Gartman. I could go down the list. It's the older generation that really has the knowledge. I'm Jewish. I'm not particularly religious, but in Judaism, we have the Old Testament, but we also have what's known as the oral tradition, and those are the learnings, the teachings that one generation passes down to another orally. It's the wisdom. It's the wisdom of the religion. And what I fear has happened because of the tsunami of liquidity that's overcome markets, combined with technological change and social media and all the rest, that the oral tradition, as it were, for the investing world has been lost. And voices like yours need to be heard, Marc. If there were more elder statesmen, if I can use that as a compliment, I'll allow you to return the insult in turn. If there were more voices like yours heard in the public square, I think we would all be in a better place. And that's what I try to do here, and I am so happy you came into this room. This has really been. I've done, I don't know, 40 or 50 of these. I have to think this is actually the best room we've had so far, and I'm so grateful that you've come here today, Mark. Seriously, at this point in your life, my life. This is how we give back, and Mark, again, I thank you on behalf of everybody from the bottom of my heart. This has just been superb.
Yeah,
Um,
it's fun, George, and I like you, and I don't like many, and I'm in a weird place in my head because I was walking a horse the other day and took off its halter and it got spooked and bolted left, and I have a busted humerus and I have a shoulder that's in four
oy,
pieces with nine screws and two plates. So I'm
oy,
kind of I'm not as physically doing this summer as what I should be doing. So gives me more time to be on these
no,
spaces and reflect a little bit. But I'm a little fed up right now. So,
that, that's
but
all
I'm
right.
not
All right.
but I'm not on any pain meds. I have not taken one opioid or anything like that. I just took Tylenol, but it's it's
Right.
uh it's going to
What,
be a
so,
lot.
yeah. What's the prognosis, Mark?
Uh, the prognosis is they're very pleased with my range of motion, but I can't begin doing anything with my left arm for 4 months.
Oy,
So
oy, oy.
I'm limited to lifting a pound with my left arm. So
Got
I'm
it.
a little I'm a little up, but
I know you're not a crypto expert by any means. You made that clear. However, just sort of 30,000 foot level, when I look at the influence that the crypto lobby is wielding, you have Sam Bankman-Fried. I think FTX was the second largest contributor. And again, I don't want this to make this political. Both sides do it. So let's just be very clear here. But you have people like Sam Bankman-Fried. I believe FTX was the second biggest contributor to the Biden campaign. I think they gave $5 million or something like that. And then you see, his mother is a pretty heavy lawyer in law school at Stanford Law, whatever. I think she was an advisor to the Biden campaign as well. And again, this is not political. I'm not taking sides here. I'm particularly appalled at what I see going on with all things crypto. Do you have any perspective on the regulatory side and the amount of bad behavior in crypto?
yeah. So as you know or don't know, I'm heavily involved with T Zero, which is a part of Overstock that is more on blockchain than crypto. And I helped put together the deal between T Zero and ICE, which owns the New York Stock Exchange. ICE's investment in T Zero and the hiring of David Goon, who's CEO of T Zero. I think crypto started at 1.0 with the early players. It's now at 2.0 with Coinbase, Gemini, and FTX playing around. And I think we're going to go to 3.0 soon. And I think what's going to happen is the Coinbases, FTXs, Geminis, all these guys of the world, these guys are not run by what I would call financial executives. They're run by people who were born on third base, who made a great crypto trade when crypto was young and made fortunes, but they have no clue how financial markets or exchanges work. And while these guys can lobby and donate money, I think crypto and or blockchain and or alternative securities and tokenization is not going to go away, and it is going to be the future, but I think it's going to be done by people like T Zero with ICE, who knows how to run exchanges, knows how to run financial markets, and all these pretenders are going to go away because they have no clue on compliance, how to work with the SEC, how to work with FINRA, and how to do things properly. And I think the hurricane combined with a tornado, combined with a wind shear, combined with crypto blowing up or Tether, what have you, is basically going to create what I would call 3.0. And 3.0 is going to be these markets with real adults running them. I mean, that SBF or whatever he is, who sleeps on a futon. Nothing wrong with sleeping on a futon. I think all these guys are going to be parts of history. And I think the real, blockchain, crypto, alternative securities is going to be, with real guys running the show who knows how to play in markets. Because these things right now it's just complete and utter mass speculation. It's just an absolute embarrassment. And these guys grew so fast, they outgrew the SEC, they outgrew FINRA, they outgrew everybody. And by the time they got so big, no one could regulate them. So
Right.
when you're unregulated and you blow up and you blow the thing to the center of the earth, out of those ashes are going to become real companies with real players with real money. And and as you know, George, I mean, how many times did Apple try and fail, and did Jobs try and fail until they hit it? I mean, Apple, what people don't understand is when you and I were young, Apple was just a complete fucking disaster because they couldn't get any, they couldn't get any, they couldn't get
100%.
anything right, right? They couldn't,
100%. 100%.
they couldn't get
100%.
anything right, and Jobs was viewed as a complete misfit, and sometimes it takes a while to hit it, and I think, and I'm highly confident that the current roadmap of crypto and who the players are is going to look very different, very, very different 6 to 26 months from now. Very different.
So let's hold it right there, Mark. I'm gonna change the order because we just got on a crypto thread, and I presume he's going to ask a crypto question. But again, Crypto Bull, I don't want this room to morph into a crypto shit show. So if you have a focused question or observation, you want to contribute to what Mark was saying, that's great. But again, I'm not going to allow this room to become a crypto room. So, Crypto Bull, you have a question for Mark?
Yes. Well, first of all, I've never talked about crypto so far in your spaces, but if I may, I would like to say a couple of things. But if not, I would ask another question related to crypto, as you prefer.
No, I really don't. Unless you have something really.
Okay, so it's
no, hold on. Let me make it clear. If you have a variant perception or an interesting, different idea, which is not Captain Obvious 101 thinking that I can read on the front page of Barron's, I'll allow it. But if you're just going to express an opinion, I think Bitcoin is going to 50,000, blah blah blah, I don't want to hear it. So I leave it to you.
Yeah, don't worry. No, I'm not gonna say that. Absolutely. No, just want to say that in regards to regulation and the innovation of the space, I actually think that this bear market in not only in crypto but in everything is actually, it's positive because it's going to polish the industry. To be honest, what happened over the last couple of years in every market, as you have said, but even in crypto, is incredible. And we can see pictures, exchanges of NFT selling for millions. And I think that this bear market will polish all this stuff, and the crypto sector, the crypto industry, will come out of this much more strong, which much more useful use cases over the next 24 months. And I think that this will do part of the job in regulation. So I think that in 2-3 years from now, we will still need regulation, but less that we will need the regulation we need today, because the industry will polish itself and over the next 24 months. So this is my take on crypto and the regulation. And regarding, I would like to touch on Kramer, just 30 seconds.
Yes.
And ask, because I'm sure he's an intelligent guy, and I've heard about how intelligent it is from a lot of people. And he has been wrong so consistently that I think he's doing it on purpose. So my question is, could it be that they are doing this on purpose in order to create extra liquidity from retail for someone that has big position and needs some extra liquidity? And who is better to provide extra liquidity than retail? You know what I mean? So that's my question. Because otherwise, I cannot explain why Kramer is so consistently wrong.
Yeah, Crypto Bull, I love the question. Marc, why don't you have at it? Go first.
I think there's no hidden agenda. I think the crazy part is retail is actually performing and behaving smarter than institutions and hedge funds. I don't think Kramer is necessarily playing with retail. He's trying to play to his stupid audience and to what the producers want. That's the crazy thing with him. He has enough pride and he has enough ego that he really wants to get it right. It's just he's in such a slump and he's so cold, and people around him are so scared to pull him off the air and say, just take a mental health break and go mine copper in Zambia for 3 months to get your groove back. He's just been flat out and is wrong. And unlike George or myself or a couple other of my pals, people are sometimes just afraid to tell the truth. And Cartoon Network, I think their ratings are probably going down the drain faster than the market's going down. And I don't think they know how to stop it. I really don't. I stopped watching this shit years ago. I don't know how anyone with any sense can actually watch that shit.
But Marc, you know what's remarkable though? Excuse me to interrupt. You know what's remarkable? If you and I sat down, and I say this in all seriousness, if you and I sat down and said, let's try to set up a parody account, making lose as much money as quickly as possible, I don't think we could replicate his record. Marc? Have you seen this Twitter feed?
Yes. Yeah.
Have you seen Inverse Kramer? Have you seen that thing?
Yeah, Inverse Kramer is great, and it on one hand it's serious, on the other hand it's funny. And if you weren't playing with people's hard-earned money, it would be funny. But the problem is, if you and I were running CNBC or we were the head of content, I would just try to level with people and basically say there's no level of interest rate, folks, to get the price of diesel fuel, which is used worldwide for everything, down, right? You could take rates to wherever you want. We need the price of diesel fuel down, and we need it down big. Okay, that's the issue. Taking rates up 50 basis points, 70 basis points, 100 basis points, you're just going to knock people through the windshield. And all this stupid fucking talk about recession, is a recession coming? Who gives a fuck? I mean, at the end of the day, people, need guidance or straight talk to help them out. And all this bullshit that's always on Cartoon and others just confuses people.
Marc, I couldn't agree with you more. It's funny. I've tried, and thank you for the comment earlier. I've tried my own small way to speak truth. Put power to truth. And I'm so grateful that you're in here. I mean, I think I'm doing great, but I've only gone from 2,000 Twitter followers to 32,000 in the last 6 months. Meanwhile, he's got 1.8 million followers, and he's watched by millions every night. I mean, I'm really afraid. I'm sad, Marc. I think inevitably that with the Cartoon Network and Kramer and Kathy Wood and retail. I mean, Marc, you know this. TQQQ, the levered Q, has taken money in this year. I mean, Marc, Kathy Wood has taken money in this year. These are things you don't see at the bottom. I'm afraid, this goes back to the question I raised earlier, I think there's a chance this market is basically going to go, people are going to be shocked by both the speed and the extent of the decline. I mean, look how much this garbage has gone down, and these mofos have been buying the whole way down. What happens if they finally get the joke and some of them want to sell?
Well, then you'll go from 30,000 followers to 50,000 followers. I mean, the one thing, George, is I don't judge a man or a woman by how much money they have. I don't really give a shit. I don't give a shit on Twitter followers. I have 15,300 people blocked because I won't listen to any bullshit whatsoever. You can disagree with me, but I won't take any disrespect. You disrespect me, you're blocked in a second. So it's not Twitter followers. It's that people, and I've tried to help the apes out with this. People are looking for direction. People need education. People
Yeah,
need to be people.
Mark. Let me interrupt. I'm not measuring myself by Twitter. I'm only using that as a barometer for
Well,
where the crowd is.
yeah, but he has a platform, right? You get to turn on, whatever CNBC is on, and you get to watch him. And
Yeah, but you know what? You have some of these other jackasses out there. Like, I'm going to name names: David Hunter. 180,000 Gerber Kawasaki. People listen to this rubbish.
Well, that then hopefully over time, if people lose enough money, or all of a sudden the light goes on, things will switch around, right? Things will switch around. My buddy Tom McKenna, he always said, money always returns to its rightful owner.
Yep.
These things take time, but I will say, what month are we in? June? I must
Yep.
say, the velocity of what's going on has been at a speed that I've never seen before. And this volatility in certain names has been mind numbing, just mind numbing. And
100%.
and I view myself as a tough guy, and I think I'm like good at this, and it's very, very, very hard for me to
100%.
know on a day-to-day basis if you're coming or going.
100%.
And
Let's do KFAB and then Mark Newman. KFAB, you wanted to weigh in? KFAB?
Yeah, I was just going to say, for anyone who hasn't checked it out, Kramer actually wrote a book on his career way back when called Confessions of a Street Addict. And I read it years ago, so it's not something that's top of mind. But I do remember coming away from reading the book having thought, and this is your point that you make all the time, George, that there's nothing new under the sun. But basically, his hedge fund record, track record was built on luck, meaning that he happened to be in cash for the 87 crash, which he could then leverage for fundraising. And then he basically was told how to manipulate the commission structure on the street to get that quasi insider information and play analyst upgrades and downgrades and then blow out into the news. And that was a large part of how they made their money in the kind of the early to mid 90s before the regulatory regime changed. And then when that changed, he basically got out of the business. So, I don't think he was ever, he's not Stan frickin' Druckenmiller. You know what I mean? He's not George Noble. People that actually are stock pickers that do long short. I don't think, again, he wrote it in his own book, so I don't think I'm slandering the man about how he made money. And his ex-wife was a really good technical tape reader, and she was part of how they made money. I don't think much of it had to do with Jim Cramer doing fundamental analysis and picking stocks, and that's basically how he's been branded on CNBC. And I don't think there was ever any evidence that that's something that he has a particular skill set in.
100%. Hey, let's do Mark Newman and Prodigal. Mark Newman, what's up?
Hey,
Mark,
George.
Hey, Mark.
Hey, so first of all, originally about 45 minutes ago, you said Mark and then Mark. And I want to thank you for taking questions because there's no way this Mark could follow that Mark. Okay. That's just too big an act to follow. So great respect to Marc Cohodes, and really amazing to have him on here. I wanted to sort of tie together what I've sort of heard here in the last bit, and Mark touched on it before. There's no adults around. We're at this, what I think is nearing a Max Bezel moment in the J.K. Galbraith use of the term. Basically, the insider trading busts that we're seeing, which are so small and so few and far between, they're like $1 million here, $2 million there. The truth is that above 50 million or 100 million or any of the insider garbage, the SEC, Elon whole thing, once you get to a big enough level in the orders of magnitude, it becomes this, nobody wants to bust anybody in their club, right? And so the little guys, the $1 million insider traders, they get busted. And we're sort of at that period where I think KFAB hit on it earlier about the sovereign bubble now. And the truth is, from 00 to 079 to recently, we've never cleaned anything out, right? We've just built on the foundation that was the previous bubble, tech, real estate, credit, and now it has elevated to that sovereign level. And I just think that the way we're seeing it, Marc just said before, he's never seen anything like this before. He said Buffett and Munger probably have never seen anything like this before. I think that's right. I think we never assumed that the order of magnitude level of irresponsibility in the Fed, the encapsulated on the tech, FinTwit, everyone piling in, and hey, this is the greatest idea. We are at this period where there's no recourse, right? The SEC has no teeth. Gary Gensler is just a figurehead. I mean, Elon Musk said he doesn't respect the SEC at all. And so that is sort of the I wouldn't say the leaders of society, but that's definitely influencers in the finance world shaping the narrative. And so when we talk of Jim Cramer, he's an addictive personality. KFAB just said his book was reminiscent of a stock addict or whatever. He's an addictive guy. So even though he's doing horribly and makes terrible calls, he gets that rush, right? Going on TV and saying, "Oh, Bear Stearns, your money's safe. These guys have no idea." All these things. It's just a clown act. He's like a carnival barker. And I think that's sort of part and parcel where we are. That's why Ross Sorkin, that's why he has Saylor on. That's why he has Pompliano on, because they're talking about this Bitcoin garbage and there's no recourse. Those guys put El Salvador in the worst trade in El Salvador's history. And he's like, "Oh, we should talk more about Bitcoin." What they need to do is say, "You can't be on here anymore." But it's a ratings game. So I just wanted to comment, and I wanted to ask Marc a question. I want to circle back here on two things, okay? One is the liquidity he mentioned, and I wondered, we didn't really talk too much about stock float and the combination of stock float plus leverage and the options market. These things make it even more exacerbated. And then the last thing I want to leave, generally speaking, here on the sovereign, going back to KFAB just before Marc, I think that next week's FOMC is sort of important. I think the bigger one is June 23rd CPI in Japan. Because when we talk about that sovereign, and Belkin had talked about this on a bunch of spaces ago, he thought the MMT experiment was reaching a max point in Japan. And I think that the 23rd CPI is a bigger data point for sovereign activity than next week's FOMC. So Marc, maybe you could just talk briefly about the liquidity in the stock float world. Because I think there's less stock float and greater liquidity and greater leverage, or less liquidity, more leverage.
Before I get into that, what you said when you started off, you've had what I'd say is an aha moment, right? That what you said, if the investing public were to utter what you said, people would then get it, right? You get it. Because you now get it. You get what I'm talking about and what bothers me so much. And, a guy like Porter Collins, who I think is probably operating at one of the highest levels I've seen in decades, gets it. My buddy Jared in Canada gets it. Roland Kuiper gets it. There's so few people. George gets it. There's so few people who get it, but you articulated the aha perfect storm moment that's here, which is why, I don't give a fuck on 50 basis points, 70 basis points. Yeah, it just doesn't matter, because the sheer velocity of everything put together is so fucked up. You need someone, or people need someone to say, "Here is what's going on, folks. Brace yourself, because this just doesn't end smoothly." It just doesn't.
Yeah.
Instead of just the fucking happy gas that they just try to keep plugging everyone into to play the bounce. And yeah, there'll be a bounce, and yeah, bear market rallies are bad, and blah, 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 on and on and on and on. But, folks, Carvana has gone from the high 300s to $20 really fucking quick. But cumulatively, the people who are short Carvana lost their ass, because they were short it from 40 to 380. And instead of the liquidity and the float thing, which I'm not really good at, and I don't like talking about anything I'm not good at, because I'll just confuse people. What I'm good at is the jaguar in the tree. And when I say I'm only interested when the jaguar falls out of the tree, Carvana is the textbook of the jaguar falling out of the tree and when you're supposed to get out of something, whether either sell your long or short. And this market is quickly or getting close to approaching the jaguar in the tree, where if the jaguar falls out, and it hasn't fallen out quite yet, it's going to be very hard to repair the thing for a long time, which gives George's thoughts about peak valuation in his lifetime, more credibility. That if people all of a sudden get scared and people start becoming less sellers of the stock, or selling Kathy Wood, or selling the triple Qs, or whatever the fuck they want to sell, things can get out of control.
And
Because
Mark, let me interrupt. I'm going to actually act as Switzerland. Mark Newman to Mark Cohodes. I'm going to be the go-between here. So, Mark Newman, I'm going to put a question to you. You can maybe frame a good question back to Marc Cohodes. And that is, just like in Japan, for those of you who don't know him, I've known Mark Newman for, 30 years, I believe, or thereacabouts, almost 30 years. And Mark started his career on the Tokyo desk for Merrill Lynch. And when I was very active in the Japanese market, my first hedge fund in the 90s, that's when I first met Mark. And Mark, let's go back to another time, another place in Tokyo, where for those that expert in things Japanese as you are or were, the idea that the large cross holdings in the Japanese stock market that made for effectively you had a very small float, and the effective market cap, if you canceled everything out, was actually much smaller. So let's say we had a typical Zaibatsu group company like Sumitomo or Mitsubishi or Mitsui, and let's say there's Sumitomo Bank or Sumitomo Rubber or Sumitomo Real Estate or Sumitomo. So let's say you have Sumitomo Chemical, which is not a large cap stock, and let's say it's got a market cap of $1 billion. I'm just making numbers up, but let's say 80% of the stock is owned by group companies. So the available float was only 200 million out of $1 billion. And then let's say that you get mindless momentum buying coming into the market. It wasn't so much index buying; it was more just housewives just throwing money at anything that would move. Chemicals going up a lot because the float is not that great, and momentum but gets more momentum. And then you got into the whole Tobashi thing. So I'm actually stealing your question, Mark, but I'm setting it up for you, whereby company A would raise money and company B would raise money, and company A couldn't buy its own stock, but company A would buy company B, and company B would buy company A. I'll buy yours if you buy mine. And so on the way up, as long as the drinks are flowing and liquidity is good, no problem. It's like safe sex. Nobody, but no price discovery at all. But when, because of inflation or whatever, that they have to stop serving the drinks, and someone needs to start selling because what's the matter? You got a little liquidity problem there, Mr. Newman. There's no legitimate buyer on the other side. So, Mark, you maybe want to tell stories like I'd call up and be yelling at you. Oh, imagine that, right? We'd want to, short 10,000 shares of Sumitomo Chemical, let's say, or 100,000 shares of Sumitomo Chemical. And let's say it's 1,000 bid. 1,000 shares at 1,000, 1,000 shares at 990, and you'd say, well, George, I could sell 5,000 down to 950, and I'd be like, Newman, are you crazy? That's down 5%. And you'd be like, well, that's all there is. And we'd hit the bid. We go to 950. The only problem is you got 95,000 behind that. All right. And we were involved in some good old recreational shorting, so it wasn't a problem. But if any legitimate owner wanted to sell, there was no bid. It was a complete fugazi of a market. So you went from a market where there was no to one where all of a sudden people are trying to find some price discovery. And the Nikkei went from 39,000 down to 7 over a period of a couple decades. So, Mark, I don't know what part of that you want to add to, embellish, disagree with, but I just wanted to set the context for you. Mr. Newman?
Yeah. So Japan Inc. is a different mindset than the USA. Right. And I spoke to my old friend Jillian Tett, who runs big wig at the FT. We were friends in Japan when she ran FT Japan. And I said to her, Jill, what's the difference between people here in the States now behaving in their interest versus in Japan as sort of a part of social behavior, if you will? And she highlighted, and she's a anthropologist by nature, PhD, and she said the ability to work together and the desire for cohesion. And if you think about that, George, in the cross shareholdings that you talk about, that's why they never really paid huge dividends in Japan, because it was like, why would I pay this guy when he's just going to pay me back in the shares of his company that I own? Similarly, they couldn't buy their own. So there's this whole I won't sell if you won't sell, and we're protecting Japan Inc. as to not be as aggressive. Now, the foreigners, they have their own views and wants and wishes, but here in the States, like, let's think about all the big Tiger, Cotu, D1, Whale Rock, etc. Those guys are sort of in a similar game in the sense that they're in these private deals, right? And that everyone's sort of marked to make believe. And they're also in these big, large public companies. But I think that the rubber meets the road difference is here, people are more willing to, for lack of a better term, screw your neighbor a little bit. Like, it's at the end of the day, it comes down to me, that investor. Whereas in Japan, the guy was like, well, that's my neighbor and that's my friend. And we are both Japanese and we are in the same Japan Inc. So I think that's a slight difference, but it still speaks to that liquidity, George. We know that if Mr. Sato and Mr. Suzuki are not in the market because they're not participating, George Noble comes in to sell something. Well, it's George Noble against a much smaller pool, and then liquidity becomes a major issue. So I think that sort of difference is why Japan is allowed to muddle along more simply and in a less vol environment, whereas here people are willing to just be like,
right, Mark, I agree with your point, but that's how it's different. But I want to go back, but I want to get back to I think the key point here, in service of making the case for why the market could go down much more savagely and severely and rapidly than people perceive, is when you go from a market where there is no price discovery to one where there is. It's sort of like, I'll give you a different example. Let's say you got, I don't know, you have Enron, it's going up and up and up and up and up, and one bullshit story after another, and blah 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 blah, and then all of a sudden one day it's discovered that, wait a second, they're bankrupt. The idea that, well, it's down 90%, how can I sell it? People are anchored off the last sale. That's the wrong way of looking at it. If it's bankrupt, it's bankrupt. Although in this crazy market, we've seen scenarios go back to Hertz a couple of years ago where it's bankrupt and it goes up. But I digress. The point is, when there's no price discovery, when prices become completely untethered from reality, and there's no financial gravity at all, and then all of a sudden, Cohodes throws a switch, and now we got gravity. You got a little bit of a problem there. I mean, how would you respond to that, Mr. Newman?
No, that's right. Look, so for a very long time, especially the last decade, we can all attest to on this call, on this space, fundamentals took a back seat. And I think that was enabled by the, decade-long money push and lower rates. And you know that in Japan, obviously, that zero interest rate has gone on for George, we're going on 30 plus years now, right? So that's why the fundamentals and sort of the zaibatsu, the cross holdings that you speak of in Japan, are less impacted because ZERP has been in place forever. Whereas here now we are in this 6-month, 8-month, 10-month hawkish regime, and all of a sudden fundamentals start to matter a little more. At least we can say the shittiest of the shit are being thrown out. That's the first to go. So then if we're really in this firmer rate regime for a much longer time, then these fundamentals matter. And then liquidity matters more because it's not as readily available in a higher rate.
So it's
coming together.
Yeah,
Can I throw something?
Yeah, Mark, I want to go to you, but let's just start with, I'm going to give the floor to you. I want you to go to one specific point that Mark Newman just made, the last point he made. Have you ever seen in your career, because I haven't, my whole career, I thought there was some relationship between the underlying value of a company and its price, but never have I ever seen such a disconnect between value and price. Or, to me, stock prices in the last few years have been much more a reflection of how much liquidity is in the system than any inherent value of the underlying assets. Ever seen such a large disconnect, Mark Cohodes?
Yes, and what this jog my memory is I was thinking of Jaguar in a tree, and then I was listening to Marc and you talk. So a long time ago, and most of you won't know this name, we were short Iomega. And Iomega was a manufacturer of something called a zip drive and a jazz drive. And we got so destroyed in the name, I think the year we were short it, we must have been down 35%, something like that. And we had to cover the stock for damage control so we wouldn't go out of business. We thought the thing had topped at 26 up from $1 and the stock was 55 and we were destroyed. Absolutely destroyed. Covered about 90% of it at or close to the top. Huge disaster. But our scenario began to play out and they missed a quarter and the stock immediately went from 55 to about 28. And I stuffed us back in Iomega, and David Rocker almost killed me. He almost lynched me for getting back in the thing huge. Then they had more bad news, and it went from 28 to 17, and we did more. And then they had more bad news, and it went from 17 to 10. And David Rocker said, let's just cover it. We've ended up making money, and we were losing, so this is a huge win. I said, no, because Iomega is going to go out of fucking business. And it doesn't matter, it's at 10, down from 55, which is down, let's just call it 80%. I think they're going to go out of business. And we ended up making a fortune in Iomega from stuffing the short from 10 to 4, and we covered the thing sub $1. And my point and the short answer to your question is we may underline that word a couple times, be entering a period where bad companies and bad behavior can go out of business. Instead of things constantly being bailed out, build a high rise in quicksand. If we can get into a period where bad companies go out of business, right? Where you look at Cathie Wood's Holdings or Gerber, whatever his last, however you pronounce his last name, his holdings, you can say this company in 6 to 25 months will not be in business. I don't give a fuck it's down 80%. It's going to go down 100% from here. It's still, you have plenty of time to still get out. And that's the mindset that may and should begin to change. Not all companies are going to go out of business. There will be a future in good deals going up and bad deals going down. But there is no future in Carvana as you know it.
Yeah,
right?
Marc,
The stock could be 22 and people will say it's 22 down from 360. Where have you been? Well, if you paid attention, you would have been out at any point in time. But if it goes from 22 to 4, you're going to be happy you sold it at 18 or 16 or 21 or wherever it is. And it's sort of a mindset, George, a mindset overlaid with liquidity, overlaid with expectation, overlaid with arrogance, overlaid with no adults in the room, overlaid with people just saying, I don't want to be anywhere near this shit show. So although I've made a huge mistake not selling it now, at least I get something.
Yeah, Marc.
It's the mindset, the mindset where people may talk bearish, but as you said earlier, they're all fully invested.
Yeah, Marc, 100%. Let me just pile on another way. Let me take it another way. I love talking to you, man. Let me play it another way. I went to a conference in December of 2018. It was in New York City. They had one of these buy-side conference things. They had the rich and famous, the great minds giving their stock picks. And they had this fellow, I'll refrain from using a stronger term. This fellow, I'm not going to say gentleman, but this fellow who got up and was extolling the virtues of Carvana. I never heard of it before at that point. And going on and on, it's going to be the Amazon of used cars and blah, blah, blah. And listen to this whole bullshit. And you're a pretty quick study. I am too, Mark. I can look at financials in 10 minutes and get a pretty good sense of what's going on. Look at the financials, the margin, the valuation, the ownership. There were a couple Seeking Alpha articles out there about, as you would know, I know you know this, Mark, but others in the room may not know, the scam accounting and the not arm's length transactions. And in 10 minutes, I had a pretty good sense of what was going on. And this guy got up there. I think he owned like 4 stocks, maybe 5 stocks. Let's say 5. Let's be generous. Hey, Mark, could you imagine a portfolio with five positions? He had like 20% position, let's just say for the sake of the argument. So talk about hubris. I mean, your arrogance, all right. You all have to have some of it.
Well, this is that Cliff Sosin guy.
Yeah,
This
yeah,
is
exactly.
Sosin.
Okay,
Well,
I forgot to say
it gets better. So there's a guy on Twitter, Henry Reardon, at Henry Reardon. That's not his real name. And he's a young guy and he's Canadian. And again, him and Porter, in my mind, are operating at probably the highest level I've seen investors operate at in decades. These guys are knocking it out of the fucking park. I mean, and they're right for the right reason, and they have things bet right. So this guy Henry reaches out to me when Carvana's like at 300. He says, "Can you help me with this?" And I said, "Like, what's your story?" And he tells me, and he sends me his stuff. And I just said, you're right on track, but your story is just too complicated. You need to speak in 8th grade so people understand it. And he adjusted his pitch, and the company is blown up, and they've fundamentally missed, and he's all over it. And he sent me some interaction that he had with Sosin, when the stock was 300. And he sent Sosin all this fundamental information, how Carvana was completely fucked. And Sosin responded back and so disrespected this guy that it's just absolutely staggering how arrogant, wrong, and stupid Sosin was, because Sosin let stock price do his analysis rather than looking at the fundamentals. And I mentioned to Henry, I said, let this motivate you, that this cocksucker is so disrespecting you and your work that you just never, ever, ever let up. Ever let up. And Henry, he's shitting on Carvana every day to this day.
And
But these guys who confuse a one, bull market with brains, 2, let stock price do their analysis, and things like that. You mix that in also, you throw that spice in the chili with everything else we've discussed. You're really dealing here with a witch's brew. And someone just DM'd me about, Julian Robertson, and I like Julian, and I've known Julian forever. But Julian blew himself up, short Japan, in that period you were talking about, and blew his fund up, in 2000, created these Tiger Cubs, and now these Tiger Cubs in 2022 are blowing up the market. So there's all these wild factors out there that all seem to be, the pins in the shoulder at the same time, which is just going to create, quite the environment here.
Mark, I
But
couldn't agree with you more. I like the way, as always, your pros and choice of adjectives to sum up these geniuses. There's a phrase I know this will resonate with you. For all I know, maybe you originated it. I got it from somebody else. It's something along the lines. I'll say it twice. I'll say it slowly. I'm not young enough to know everything. I repeat, I'm not young enough to know everything. You get run over enough times, like you and I have, my friend, and you get humbled, and the more you learn, the more you read, the more you realize you don't know. And you have these characters like this fellow you were just mentioning about the Carvana, the Sosin character. He was the one pitching Carvana in December of 18. I took one look at it as a complete flaming pile of shit. This is worth nothing. I had no position in it. I've never touched a share of Carvana because I also looked at the short position, which also goes back to the market structure point we are talking about before about small floats. And I'm like, you know what? Not my cup of tea. I'm not going to be long. I'm not going to be short. Here's a remarkable thing. I think the stock was around 50, and it went to whatever it went, 350. It was only a month ago it got back down to the 50 that I saw it. I saw it in December of 18. And here's the point. I want to talk about pricing. If you forget it, because we're all human, we're all frail, we all get anchored. It's what the psychologists call recency bias. If you came down from planet Mars, Warren Buffett comes down from planet Mars and said, okay, or Mark, you come off the spaceship with Warren Buffett. It's like, all right, Marc, Cohodes, here's this company Carvana. This is what they do. These are the margins. This is the balance sheet. This is what's happening in the industry. Here we are in the economy. Blah 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 blah. Here's a scam accounting. Blah 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 blah. What is this thing worth? And I didn't show you a chart. I think you'd say no bid. It's just not my cup of tea.
Exactly, which is why I'm bringing up the Iomega analogy.
Yeah, no,
100%.
Mark. The entire Mark, we're saying the same thing, is Iomega on steroids, in my opinion. That's what I believe.
That can be, but I always go stock by stock by stock, right? Because as a person who's too skeptical for his own good, I always try to take market out. If market helps me,
all right, okay.
What I'm trying to say is, if market is the wind in my back,
yeah,
that's a plus.
Yep.
But every day I wake up, I assume I'm flying into a headwind.
No,
and if I wake up and there's a tailwind,
yep.
God bless.
Mark. The only person that's more excitable on this stage than you is me. So, as is my one, I overstated the case. I 100% agree with you. All I would say is there are more stocks in this market. Let's leave the market out. There are more stocks in this market. There are more Iomegas in this market than you can shake a stick at. All right.
Yes.
And so we're not going to allow. This is the first time I'm so blessed. Again, thank you for being in this room. We are not going to, just as we don't allow large commentary on crypto, we also do not allow a lot of ink on the electric car company that shall not be named. But that's another one. Okay, if you came down from planet Mars and you say, okay, this thing's on 9 times sales, your typical auto company's on half of revenues, and this thing has no moat, and blah 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 blah. Where should it sell? Forget about the narrative. You'd look at it, and in all seriousness, Gordon Johnson, who's not in this room today, but who's forgotten more about this company than anyone else on the planet knows, his price target is 67. Last print 698 bid, and he actually believes that 67 is too generous. It's too high a price. Go ahead.
George. If the entire crowd, right, that entire bunch, would have just listened to my Jaguar out of the tree scenario,
yes,
I could have saved them billions.
Yes,
tens of billions. These guys all, right? It's not about fundamentals all the time in stock prices, folks. There's a lot more to it than just fundamentals. And if these guys, the Tesla short crowd, right, who buried themselves, they got so arrogant with their view, they didn't realize they're shorting a guy, Elon, who's basically above the law and untouchable in this country. And once you realize that this guy is above the law and untouchable, shorting his entity is a death wish, right? And until something changes, right? The stock may go to zero in a minute. It's just not for me because this guy is above the law. No one wants to take him on. Nothing has happened to him for everything he's done or said. The stock, even here is up God knows what. And Tesla may be the best short at 139 and 7/8 on its way to 20 than wherever the fuck it's selling at today. Right? And see, there's a difference because there's more to it than go on between Model 3, Model Z, Model K, sending guys to the moon, landing this, that, and the other. He represents a period in this country of someone who is clearly above the law.
100%.
And no one has the balls to go after him.
100%.
DOJ, SEC, president, right? And to go fight it, right? is like me as a much, 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 much younger guy going to fight an Omega at $22,
Yep.
right? And once you've been completely run over in your life, as you know, that's not a feeling that you want again and again and again.
Right, and I love your example. People should, if there's one thing they should take away from this comment, Mark, I have to tell you, this has been the best space ever, and you are a true national treasure. Seriously, I mean, this is your calling. This is my calling to try to teach people, and this is, I mean, we never give picks in this room, but your experience, your wisdom, as I always say, wisdom. You know, it's a bunch of learn what you learn from your mistakes. You and I have cornered the market on that, and I have to say, this is probably the best single space we've ever done. So I want to thank you for that. Let's get some other questions in here because I don't want to monopolize this whole thing. And we're going to do Prodigal because he's had his hand up for a while. Then Oil God. So Prodigal, you got a question for Mark? Prodigal, please unmute
Yeah,
yourself.
I was going to make a statement and then ask a question. I apologize if there's noise. I'm in Cape May. It's raining and I'm with a bunch of kids. So if you hear screams, that's what it is. I mean, I agree with everything that's being said in regards to fiscal and monetary policy and what's coming. I mean, everything is being even more complicated now with, you have the dollar strengthening while oil is skyrocketing. It's going to go up even more, right? Even with the release from the strategic reserve. And, I think, outside of that, there's a lot of geopolitical risk that can make this even worse. When you get a downturn of this nature, which, a lot of the talking heads try to downplay it, but now you see a break with that with Goldman Sachs president, with Jamie Dimon recently, et cetera. It can get worse. The Arab Spring wasn't a push for freedom and democracy. It was due to food crises. And we're seeing this start to play out in Peru. A lot of these countries that took out a lot of debt for COVID or, were overleveraged to begin with, they're starting to see the chickens come home to roost, whether it's Sri Lanka, Egypt having to take a $2 billion deposit from Saudi Arabia, et cetera. So, I mean, when you say this can get worse, I think, one thing we haven't talked about is, Israel signing that deal with Saudi Arabia is showing a push with the Gulf states that, they're probably going to move on Iran. Now, this deal with Iran was supposed to be done months ago. And, that's one area that can flare up. You look at Turkey.
Prodigal, I'm sorry.
Yeah.
I want to keep the conversation
Yeah.
on.
So my
on the
question is,
straight and narrow. So if you have a question, please.
yeah, my
Otherwise,
question are any of these models taking into account, these geopolitical risks, whether it's Turkey, starting to assert its influence and basically warmongering against Greece, or the threat of Israel, Iran. I mean, I agree with everything else regarding, the superstorm coming, but, are any of your, companies taking into account, these geopolitical risks that are most likely going to flare up once oil hits 175 and the famines start, they're already starting in Somalia, et cetera?
Thanks, Prodigal. I would just say, listen, there's so many ways to lose in this market and so few ways to win. If you've been in these spaces before, you will have heard spoken about a lot of the risks that you just enumerated. I think, what Mark was touching on, that, the price of oil, the price of food, forget about all these, 50 basis points, 25 basis points here and there. You fingered a lot of other risks. They're just, so many ways to lose in so little time. We've been going at this for over 2 hours. I thank you for your comments, but it's just it just comes with the territory. All right, let's hold right here for 1 second before we go any further. I have to say, this has been the most fantastic room that we've had, and we've had a lot of great ones. And one thing, and Mark, I don't know how you are familiar with this, but aside, I believe in giving back. I know you do as well. One of the things we've done in this room is we've actually raised over $200,000 for World Central Kitchen. The room's been incredibly generous. We've had over 700 donors so far. Everyone in this room is dealing with first world problems of how to protect or increase their net worth. And there are people out there that have much bigger problems than we do. And so we identified a charity a couple months ago, World Central Kitchens, and we embarked on a fundraiser for them. We've raised to date, I think, $217,000, and we had a very inspiring leadership challenge gift from Alexander Stiles in the room today. And it's just been extraordinary. It's been nothing of its kind has ever been attempted before. I think we've raised more money in Twitter than any other Twitter space room so far. So with that, we haven't really passed the hat much of late. I'd like to reintroduce my colleague Carol Strone, who works closely with me, and she's head of development and marketing, all these other good things. And so, Carol, if you could just say a few words about what's going on, we'd be very much appreciative. Carol?
Hi, George. Hi, Marc. Marc, I have been so struck listening to both you and George talk today about helping one another and passing things on from one generation to another, life lessons. And one of the reasons that we chose World Central Kitchen, which is providing food aid around the world, most recently high profile in the news in Ukraine, but also currently in Bangladesh and Brazil and Mexico and New Mexico. I think a lot about what makes an organization great, and it's their ability to harness people on the ground in local communities to help their neighbors. And it grows exponentially. And what they were able to do from the very beginning on the ground that no other organization has been able to match in Ukraine so far is extraordinary in providing something like over 20 million meals now, and not just meals, but getting seed distributed to farmers and food kits. And as the Russians are moving in on the Eastern Territory right now, they're rushing food to certain communities before they get cut off from food supplies. It's just to say that they have been so inspiring to everybody around the world in the past couple of months. The thing about disaster relief philanthropy is that about a third of all giving happens in the first month. Then another third happens in the second month. And by 6 months, most of the private giving dries up. So we were fortunate in the first 8 weeks to raise over 200,000, as George mentioned. And we're hoping that this group of listeners will keep on going and continue to give where there's need around the world, and not forget the need that exists right now and that is not getting better. It's only getting worse. So again, I want to thank all the people in the room. I don't have everybody's email addresses to be able to thank people personally when they give anonymously on the World Central Kitchen site. So thank you to those who we do know, like Alex and others, but thank you to the hundreds who have given as well, who I just haven't been able to thank personally. And let's keep on going.
Thank you, Carol. And again, Carol and RJ and Jack, they all work with me to help the cause here. Again, Marc, you very graciously pointed out, I'm not doing this for any personal benefit, neither are you. So what we decided 2 months ago, successful, that we say to people that have gotten value out of this room to please give generously to World Central Kitchen. I think we have the best spaces on Twitter, period, and it's because of people like yourself, Marc. You're giving, and hopefully, of your time, and hopefully inspires others to pay forward. I'm not too good at this Nest thing. I believe I posted up the link to the Nest, although I can't find it. If people can't find it, go to my Twitter feed or Carol's Twitter feed. I did retweet it out.
It's right at the top of my feed.
Okay, great. And there's either Carol or myself. And again, the Nest isn't quite working right. But in any event, we've raised, I think, $217,000 so far. None of it goes to, World Central Kitchen's highest ratings by the in the nonprofit world, and they're doing God's work. I mean, seriously, Carol, maybe you should tell a story or two about. I mean, they're literally getting bombed on. Isn't that the case? Or some charities you may want to talk about with the pandemic and how a lot of charities just went out of business and don't have the infrastructure to help with these types of relief.
Yeah, I mean, there are several key reasons. One is that COVID actually reduced the staffing at a lot of organizations that normally go into disaster relief areas that just weren't man and womaned up, staffed up enough to be able to be of help. The other is that a lot of organizations limit their mission to natural disasters, and people don't consider war to be a natural disaster. So it just was beyond the mission statement of a lot of organizations. And then, of course, the third one, it's a very personal decision from the board on down and the staff and the leadership and the staff as to whether they're going to put their staff in harm's way. Thanks to the leadership of Chef Jose Andres, who's an incredibly charismatic leader, brave leader, selfless person. His entire staff is of the same mindset, and and they just have a winning formula for getting quickly on the ground and mobilizing volunteers on the ground, transforming entire communities into a war effort the likes of which nobody else has been able to replicate. So if anybody has any questions, feel free to DM me. I'm happy to talk to you more about it.
That would be absolutely fantastic. Thank you very much, Carolyn. Thank you for everything you do. And we're on to bigger and better things. And we're going to keep raising money for World Central Kitchen. So now we help each other with the community that we've built here. But, who would have thought that we could raise a couple $100,000 in 8 weeks? And we really, many of us we've never met before. I mean, we're really building a sense of community here. And I want to thank anyone and everyone who's given. This has just been absolutely fantastic. All right, so let's move on. So Oil God, we're going to go to you, and then Porter, and then O'Hare. Oil God, my friend, please unmute yourself. How are you?
Thank you for that, George. Very lovely to speak to you. And congratulations again on a fantastic space and all you're doing for the world. Everything that Marc had said earlier leads me to believe recency bias is just one of the things that plagues North Americans. So I have a few questions for Marc, and he can take it in any which way he'd like. But, I think what we're seeing here today will, as Marc had said, will revert back. But Marc, I don't know your track record, but just from one human being across the internet to the other, I just want to tell you, you're a great person. I don't care necessarily what your numbers were in the past, but the way you take your time to explain things, and also you discuss the way you deal within your own family. I think we'd be very lucky to have more people like you step up and not just talk about sort of how to manage money and what to look for, but the humility behind it. So I just want to congratulate you on a fantastic introduction to George's Spaces. My sort of question and comments to you have to do with the age of the workforce here in North America and the average age of the people managing portfolios and giving investment advice and managing these funds. And I'd like to argue as well that if they were guiding Jim Cramer in the broadcast studio, these aren't 60 plus, year old people with 30-year plus experience. I think we're at this generation now in wealth management and portfolio management on an institutional side where, look, these people in your ilk have gone through a lot. They've gone through 2008, they've gone through the Trump era, they've gone through now COVID, and it just feels like many, many more portfolio managers that I'm seeing are taking a back seat to just what it takes to think forward, if you will. And George, I'm actually going to pick on somebody that I was listening to a portfolio manager at Fidelity with the name of Marc Schmel. I don't know if it rings a bell to you, and you don't have to answer that right away. But Marc Schmel manages one of the most flagship innovation mandates that Fidelity has in North America. Fantastic track record, 2019, you had all the COVID winners. I think he was up closer to 90%. I don't actually remember the exact number, but it was one of those very, very good ones where he jumped on the Shopify train and blah, blah, blah. And obviously I was listening to him at the time, and he had said he'd never invest $1 in fossil fuels and oil companies again. And now today he's sitting around 30 to 40% in oil and gas. And so it just makes me think, and I want to ask Marc his question with respect to the experience here in North America, what the average is doing in the stewards of capital. I would love his comments on that. And then the second question I have for Marc has to do with what may be coming next. And to me, this climate narrative that Biden, and obviously we have Trudeau here in Canada, pushing to get votes, with the millennial being the largest of the population, has done so much damage for investing in the oil and gas space. To Prodigal's point, is it really a situation where everything is just going to crash and goodbye stock market, we can actually lock the front door for the first time? Or is it going to just be this great rotation into, again, inflation protected commodities and really for an indefinite period of time? So Marc, I'm going to cede the floor back to you, and I just want to thank you again.
Well, you're very kind, and those words mean a lot to me, really do. So I think George is going to appreciate what I'm going to say. So let's say I'm 62, and let's say George begins with a 6. I do this a lot for the love of the game. And I really am a purist and enjoy the business for what it was and the market and being able to figure it out. And I've had huge success, and I've also had huge failure. Huge, big. And it's part of what makes it, right? When you do, it's kind of like coaching. I understand why coaches quit, and I understand why they come back. Because to me, there's nothing worse than losing. I hate losing. It's awful. It's horrifically bad. And the only thing that's different than losing is how great it is to win, and to win like Super Bowls, and to really get it right. And the conflict between the lowest of lows and the lowest and the highest of highs is what makes a guy like George and I and a few others tick, and why you can't give it up, and why I have plenty of money. I don't need any more money. And so does George, and so do others. But what you want to try to do is give it back, the really great ones. And the people who are in it for money, the older people, don't give a fuck. So they're not interested in helping others out. They could care less. They'd rather fly their private planes and do the golf thing, and which is totally fine. But they have no interest in making this business better or trying to help people out, which is why you don't have the older crew involved in helping people out, because there's a burnout factor, there's a huge time factor, there's a life's too short factor. But for the people who really have this in their blood, and who do this for the love of the game, like me and like George, it's worth doing. And the problem is there's so few people left who do that. It leads to a vacuum of inexperienced people who have no real clue of what they're doing, who haven't been stressed enough in life, who are used to being told they're always right, and they're always great, and they're always super, and they've never had adversity, which is why you're set up for the problems that we currently have, or could have in the future, because they've never been tested. They've never been told they're wrong. They've never been told they're foolish. They've never been told they're going to lose all their money if they keep it up. And that, to me, is a huge issue. A huge issue, that there's no real teaching that goes on. That people use recency. If you're up 90%, you actually believe you're up 90%. Well, let me tell you, I've had years since I've been out of the hedge fund business where I'm up 250%. But it doesn't make me feel like I'm smart. I'm my own worst enemy. And when I have a great year, it's not like I'm smiling or think I'm smart. I focus on where I fucked up. I focus on my losses. I
So,
focus, that I beat myself up hugely when I screw up, even when I'm overall doing well.
so
So,
Mark, Mark, I could not agree with you more. Let me. You can breathe for a second. Let me take some of the air out of the room. I could not agree with you more. We are cut from the same cloth. The operative term that really resonated with me was you said, for the love of the game. For the love of the game. Let me tell you a story. Those in the room that didn't know him or knew of him. There was a gentleman named Jack Nash. He passed away a few years ago. One of the great, all-time great investment greats. Good friends with Michael Steinhardt in the 80s. They absolutely killed it getting long the bond market, from 1981, and rode that sucker for a decade. And multi-billionaire. That's when a billionaire was a lot of money. And a good friend of mine went to work for him. He was actually my first investor, Jack Nash. And I introduced him to a friend of mine who Carol knows, who went to work for Jack. And one day, my friend walks into Jack's office. It's like 7:00 at night, and Jack's sitting there reading the paper, eating an apple. And my friend says to Jack, "What are you doing here? Like, you're a billionaire. Why are you here?" It's like 7:30. Why are you here? And Jack looks up at him and he's like, I like to do this. Is something wrong? The guy's a freaking billionaire, and he's there, and he's there at 7 o'clock at night reading the paper because that's what he likes to do. This is what I like to do. This is what Marc Cohodes likes to do. I had a fascination for numbers. My dad was a mathematician, and back in the day, and Marc's old enough to remember when we would get the paper, and you'd go to the business section, it'd be pages and pages of stock prices, and I had a fascination with numbers, and from that, sprung my interest in stocks. My initial investment strategy. Talk about mistakes, Marc. I was 11 years old. First stock I bought was a REIT. This was in the bull market in 1968. My stock selection process was highly sophisticated. I selected stocks on the basis of who had the coolest name. Advanced Systems. It was a REIT. It went bankrupt. Any rate, it's for the love of the game. I'm a simple guy. I know Marc's a simple guy. Yeah, I like a good bottle of wine, and Marc lives in Sonoma. He likes a good bottle of wine. I ride my bike. I don't have a fancy art collection to show you. I do things because it's the right thing to do. Unfortunately, people like Chase Coleman and Kathy Wood and Raoul Powell and Chamath and Jim Cramer and the pricks at D1, and I'm not going to redact that from this conversation. And it can go on and on and on. And Goldman Sachs, they do things not because it's the right thing to do. They do things because they can get away with it. And I think it's a rare person in this room who leads their life with that credo. You do something because it's the right thing to do, not because you can get away with it. I remember going to Goldman Sachs. This was, oh my God, I can't remember when it was, 2007, 2008, before the great financial crisis. Maybe it was later. I can't even remember when it was. And sitting down with a senior partner of the firm, a guy with whom I have a personal relationship, a friend, and saying to him, like, dude, why don't you guys provide some leadership on industry regulation? Because if you don't self-regulate, I got news for you. Someone like Elizabeth Warren, who's freaking clueless, they'll do it. They don't know where the skeletons lie. They don't know what the real problems are. They'll come up with bad laws, and it's not going to stop anything. Much better, you guys don't know where all the skeletons are because you buried them, and you'll also prevent stupid regulation. But no, they wouldn't want to hear anything about that. Why? Because they're too busy lining their own pockets. And I'm going to end my rant with a question back to Marc. Wall Street's never been a place for Boy Scouts. We know that. We know that. People go there because the money's there. But the problem's been that this bubble over the last 4 decades, started by Alan Greenspan, passed on to Ben Bernanke, Janet Yellen, Jerome Powell, go down the list. The hyper-financialization of the economy has resulted in the financial sector going from, I don't know, whatever it was, like 5% of GDP to 25%, whatever the numbers are. They're all over the place. Used to be finance just provide a utility function, providing risk capital, channeling savings from savers to those who need the capital. But then somewhere along the way, we can go back to, Glass-Steagall and the Clinton administration and Bob Rubin and all the rest. The game changed. And finance became an end unto itself. And the table stakes became so large that it increasingly encouraged bad behavior. I mean, when I started at Fidelity, I was in 1981. I was a summer student in 1980. But in 1981, I went to work there. People like, Fidelity, what is that? They're managing $8 billion. Could have made 50% more money going to work as an investment banker. I was a stock nerd. I like numbers. Go into a meeting in a conference room where there's, a dozen guys, 15 guys sitting around a table. Peter Lynch with his, ripped corduroy suit. We're stock nerds, just telling stories to each other. There was integrity. You're using your head. Now it's just a giant game. It's a gamification of the stock market. And again, you show me the incentives, I'll show you the outcome. This has to stop. It will stop. It is stopping. I think that's where we are in the cycle. And so, Marc, question to you. Has it ever been as bad now as it's been in the past, Marc?
No, I mean no by a factor of 10, but the but the but the problem, George, is when you say something and people are so short term, what have you done for me lately, instant price, and you're early, you immediately get dismissed. And thinking people get pushed to the back of the room because the loudest voice and stock price or short-term stock price movement matters. And you know, everything you say, is not only true. I started out at the Northern Trust in 1982 when interest rates were God knows where and the market was terrible. I was making 17,500 a year and spending $20 a weekend to live on and have fun with. I mean, but that's when all you had to do with stocks was find good deals would go up and bad deals would go down, and we're going to return there. The problem is the leverage in the system is so extreme and the money is so huge to keep the game going. Guys like me, they've tried to silence, now for years and years and years and years. And it's clear I've said the only job I'd ever take is to run the SEC because I could clean this fucking shit show up in about 3 months. I could bring
Marc,
in the
Marc,
right.
Marc, Marc, you and me both. Friends of mine have said to me repeatedly, I should become head of the SEC.
Yeah,
I mean,
yeah. I mean,
you and I can fix it. You and I can fix this in 5 seconds. You and I can fix this in 5 seconds.
No, it would take 3 months. It would take 6 weeks to bring in the right people, and it would take another 6 weeks to bring some great cases, and we'd clean this bullshit up, and then it would get fixed, and then everyone would realize what's going on because people are smarter than society gives them credit for. People know right from wrong. It's just this misleading people and trapping people in these false narratives, which is so fucked up. And
100%, Marc.
and
100%.
and therein is the issue, and the great thing about Twitter, I mean, forget what Elon Musk may or may not do with it, is all this stuff that people to listen to is free. And there's huge value in Twitter. And if you know how to
Huge.
data mine and who to listen to and who not to listen to and what to figure out. I mean, I met this guy, Henry Reardon, on Carvana, and I can't even begin to tell you how much money that guy's made me. And I give him full credit. I mean, he's made me so much money in Carvana, it's overcome all my long losses this year and then some. And it's because of Twitter. And the morons who run Twitter don't realize what they have. And for all you folks listening out there, pay attention to people who you think know what they're doing and ignore the people or bet against the people who are completely full of shit. And if something doesn't make sense to you, it's probably not right. And if you can't explain your idea to a 8th, 9th, or 10th grader in a paragraph or less, you probably shouldn't be in it. I mean, there's just it's just we're at a point where I think the separation is going to be extreme, and there's going to be a heavy price to pay if you're not paying attention or just listen to the party line. And if nothing else, everyone just needs to think for themselves and be accountable, for your own actions and think of what's going on.
100%, Marc. All right, so we'll do this maybe.
And also, George, I got about 10 more minutes.
All right, okay.
My buddy Shally's coming by to visit me, and I got to go pick up some lunch.
All right, so why don't we do this? Marc's got 10 minutes. I'll run the room for a little bit more than 10 minutes, but I'm going to call people. If you have a question for Marc, great. If not, please pass, and I'll come back to you once Marc leaves the room. So in order, we'll do Alexander and then Porter and then O'Hare. Alexander, great to see you. Thank you again for your leadership gift challenge. If you have a question for Marc, that's great. Otherwise, please hold it until Marc leaves because we've only got 10 more minutes. So, Marc, Alexander, good to see you. What's on your mind, my friend?
Yeah, hi. It's nice to have me. Guys, I'm going to pass this time on for someone who has a question to Marc. I just wanted to say I follow Marc for a long time. I'm really a huge fan of his, and I think the word that has not been clear out there yet is it's integrity, right? The love of the game or integrity, and you guys have it, and that made a huge difference.
100%, Alexander.
I shut up here and
No, it's all right.
let have
Alexander, do me a favor. Stay on stage because once Marc leaves, I want to come back to you. Let's now go to Porter, and then here. Hey, Porter, what's up?
Hey guys, how we doing?
Porter, we're doing great, Porter. What's up, man?
I was saying good things about you, Porter.
I appreciate that. So I have a question for Marc, and I'll first I want to tack on to his comment about the love of the game. We had a Vincent and I had a institutional investor ask us kind of recently. Said, what do you guys do for a hobby? And we said, our business is our family, right? And that's number one. And we certainly aren't CEOs of that business. And our hobby is this business of stocks. And this is what we love to do. And this is our hobby. And so, that's the way I've always thought about it. But my question for Marc is that, listen, and George is the same way. We've all been fundamental short sellers. And it feels like, those fundamental short sellers are gone. And it's one of the problems, I think, with the market. When Eisman first trained me, my first stock I looked at was Household Financial. And, he and I, basically helped put it out of business because they were ripping people off and they had a scam and, they were ripping poor people off. And, then it goes to, Eisman stood up in front of Congress and called out these for-profit education companies that were ripping people off. And, thankfully we got a proctology exam from the IRS because the CEOs of these companies told them to investigate us. But that's neither here nor there. And then, we helped Michael Lewis write Flash Boys to do away with this bullshit about flash trading, and of course they didn't do anything. But listen, that's the way I was trained, and my hero in the stock business is Chanos, and the guy does a phenomenal job of calling bullshit and on the bad actors, and he's not one of these, as Marc calls them, smash and grab guys. He's a real fundamental short seller. So my question to Marc is how do you think about this business? Because Bill Wang helped to put a lot of these short sellers out of business. How do you think about shorts and the way shorting is now? It's just feels like a lot different to me.
It's a great question. It's a compounded question, and it's something that I struggle with, where I try to mix the love of the game with trying to do social good. And was I out in front on drug pricing? I helped put Concordia out of business. That Canadian thing, did I get sued for it? Yeah. Did I get investigated by it in Canada? Yeah. Stock went to zero. Problem is there's so much money around, Porter, that you start pushing too hard, like I pushed on my medics, where 2 guys ended up in prison. You get the FBI on your ass. You get investigated. It will come out what the DOJ and FBI tried to do to me. It will come out what companies and lawyers and fund managers were involved, what they tried to do to me. There becomes such a human price you pay for speaking out against this shit because the money on the side is so big. It becomes a real mental battle of how you want to spend the rest of your life. Now, you're much younger than me, and let's say I'm 62, and realistically, I have 10 good years left at a minimum before my mind starts to get a little wonky. Hopefully, it's more than that, but the pressure to conform, the pressure to not expose wrongdoing is significant. And the benefit you get, other than feeling good about yourself, making a difference in the world, and doing bad guys in, you put yourself at great risk. And there aren't young people out there who really want a part of this. I mean, the people who you mentioned, I mean, Chanos is older than me. Eisman's no spring chicken. They don't teach this stuff to you at Harvard. I've spoken at Harvard, spoken at Yale, spoken at Stanford, spoken at Columbia, but they don't, the money and the incentive is not there. And as you said, all the good short sellers, they're all out of business because it's so fucking hard. I mean, I love it because it's so damn hard, but one could argue I belong in a fucking straitjacket for some of the shit that I've been through. So it's kind of there's a social good and a good feeling about putting bad guys and bad companies under, but most people need to make a living doing it, and it's hard to do because you get squeezed into oblivion by Wang, by the Tiger Cubs, by that fuck Chase Coleman, by D1, by what they do in Carvana. It's hard to run a business, but it's the right thing to do. So you need sort of whistleblower regulatory protection that the FBI doesn't visit you, that criminal senators to make your life difficult. I mean, I've been audited numerous times, investigated numerous times, lifetime numerous times. It's not the way an average person wants to go through life. And it's very, very, as you know, conflicting. The highs are really high, the lows are really low. And as people listening, and I don't mean this in a condescending way, the lows, folks, are low. I mean, when I say low, they are low. The highs are
Hey,
really
Marc.
high. Yeah.
Yeah, Marc. Let me ask you a question. Just following one thing you said. So I have a theory. Can't prove it, but I'm from New Jersey. My bullshit detector's pretty good. I think yours as well, even though you're not from New Jersey. I believe there's, and I'm not suggesting you know anything. I'm just asking sort of pattern recognition, sort of hunch. I believe that there's a huge story to be told between relationship between Kathy Wood, Bill Huang, other related Asian interests, Elon Musk, et cetera, et cetera. At a minimum, Huang used Kathy as a useful idiot and front ran her flows. I believe it's quite possible that it's far more incestuous than that. There's an easy way to figure that out. All that Kenzo has to do is go in and compare the trading account side by side, Huang against Wood. I know you don't know anything, but just based on your bullshit detector and pattern recognition, what is your best guess, or put it this way, how plausible do you think my theory is, and is it deserving of a complete investigation and review? In other words, how incestuous is the link between Wood, Huang, and other related parties, and possibly one of the greatest manipulations ever in history?
I think your bullshit detector is right. I need to know a lot, and there's a lot I can't talk about, but suffice it to say, I have strong reason to believe that Wang was an operative for launderers and bad foreign interests. I think Wang and his relationship to various Tiger Cubs was at a minimum ask themselves how and why is Chase Coleman so involved in whatever in these various Chinese entities, including Luckin Coffee, which was a complete fraud, GSX, which was a complete fraud. Why couldn't he do it with base Chinese names, not to mention mismarkings? And the whole thing with Wang is someone and people need to ask themselves, how can a guy who was banned from doing business with Goldman Sachs on their blacklist all of a sudden get himself unbanned, use extreme margin with the primes looking the other way. The enablers of the brokerage firms, media, law enforcement looking the other way on these guys, I think is extreme. I think it'll all come out. The problem is George, at which point the damage will be done. And if the damage is done, everyone's going to say they're going to have an investigation and why did it take so long? I mean, the stuff I gave Warren staffers, what Warren staffers know about Citadel related stuff, their role in who gets bailed out, pulling by, it's all there to play, but do it. And no one wants to do it because if the truth
Hey,
were
Marc.
to come
Hey,
out,
Marc. You're
Yeah.
breaking up on us, my friend. I suspect you're in motion. We're having a hard time hearing you, so I don't know if you just want to stop here and we can have you back for another room, or something you can do to fix the connection. Otherwise, I think we might want to call it a day here. Your call.
Yeah, I think I'm near my end time anyway. We can do this again, George. This is a lot of fun, and I hope people got
And
something out of it.
Marc, I say this on behalf of everybody in the room. It's been invaluable. This is your calling at this point in life. You and I have a similar worldview. I implore you, I beseech you, I beg you to please come back. This has been the single best room. Don't waste your time with the AMC apes anymore. You're helping people. The AMC apes are beyond help. This is where you belong, my friend.
George, I appreciate it. I'll be back. My priority number one is to get my arm and shoulder fixed. And but this is fun. This is great, and we'll do it again.
Marc, you have a good one. We'll see you before too long. We're going to keep the room going. But Marc, you're dismissed. Go take care of your arm.
Take care, George. Bye.
Take care, Marc. All right, so let's go back to Alexander, and then we're going to do O'Hare. Alexander, the floor is yours.
Hey, George, nice. Thanks for having me. And this is a fantastic space, really. Thank you for doing this. And I just had two comments and then maybe a question. Number one, I thought this was really important what Carol just explained about, the timeline, sort of when people are giving and the things fade over time. And so maybe in 2 months' time, we want to connect and see what we can do together to, have a similar initiative again and make, don't let this Ukrainian thing go and make sure that we can help some more.
Alexander, I can't thank you enough. I mean, seriously, I just want to point out that when you came along, I think we had $81,000. Carol, you remember the number better than I would. $81,000. And Carol, we kind of went from like 81 to 200, didn't we, Carol? Because I was Alexander.
Yeah, I think it was within 2 weeks, maybe 10 days, we got to our 200 goal. So extraordinary. The power of this community and the power of a matching gift and your leadership, Alexander. So thank you.
Thank you for all you're doing for these people, and thanks, George, for the spaces you do and the knowledge you provide, and therefore make people help also. But just quickly again, Carol, can you repeat for the audience what you just said about the timelines? When do people stop giving and why?
Well, yeah, there's generally, it's a rule of thumb that with disaster relief philanthropy, as it's called, there's an arc, and the outpouring of giving, a third of it generally happens in the first 4 weeks, another third in the second 4 weeks, and then it trickles off from there. And 6 months later, there's practically no giving at all. And I'm talking about private giving. It's the same when you watch press coverage of an event. It's going to fade over time. People have short attention spans. And so the hope is that with this space, we can be running a marathon and, I guess, break that rule of thumb, so to speak.
That would be fantastic, because I expect this war to prolong for a long, long time. People that understand Putin a little better know this is not going to stop, and this is going to be the long game. So let's see what we can do, George.
Yeah, Alexander, I was very moved in the past when you spoke about your personal involvement. There are many people in the room who I don't think probably heard you speak. It was a month or two ago. Could you just share with the room a little bit? I don't mean to embarrass you, but just share with the room a little bit your own personal involvement, because I know you explained to me what you've been doing and some of the people that you've taken, and I think the room would really benefit from hearing of your personal experience. Thank you, Alexander.
Sure. So, look, there are many angles. First of all, I come from a commodity family, and we traded with, or my father was a cotton trader, and he traded with the Soviet Union for 50 years old. And then early in the 90s, he took the Kazakhs and Uzbeks to the Davos Symposium, and no one knew who they are and couldn't even spell the names of these countries. And so that's how we got to know some of these leaders better. And we also met Putin in those days, and we had a bad feeling from the start. But the first 4 years, he got a lot of credit from everyone. And then, today we know that he's just one of these, greedy, classic dictators that now has the agenda to put the Soviet Union back, and has no, call it, not even moral compass, but he's just nuts, right? He wants to put this together, and he couldn't care less how many people die on the way. And I think he's gonna, people will be surprised how long this takes. And if there is a peace agreement in between, make sure. I mean, I tell you now, and I announced this war in April. Go back to my tweets. That this is going to come, and everyone ridiculed me, but this is, if there is a peace agreement, it's just going to continue. The guy's nuts. So, and he's, by the way, probably as popular in the country as he was back before the war. So it's not going to go away anytime soon. And just personally, what we did, my parents are housing now 8 refugees, and when they came to us, what was that, 4 weeks ago, all women, different ages, so from kid, 4 years old, to grandma, more than 70 years old, completely shell-shocked. They came out of Mariupol, which was badly hit. And, the first 2 weeks they only slept. And then, we couldn't communicate with them because none of us speaks Russian, and they only spoke Russian. And so we got translation, and we learned a bit more about them and so on. And then at some point we got a hairdresser to come to help them a little bit on the personal, hygiene issues and so on. And they obviously had nothing. And when the hairdresser came, after 2 hours, he came to us and said, look, I cut the hair, but I can tell you they're all going to have white hair, even the kids. Right? And that's because they were so shocked from what was going on. And I don't want to go into details there, but I mean, everything you hear on TV and more, right? What they had to personally see with their, husbands and brothers, and all the men systematically killed, all the women systematically raped, they just have white hair today. They're going to have white hair in the future. Kids. So it's really dramatic, and let's help when we can, and when we have the privilege to can. And this World Central Kitchen, George, I follow for quite some time. I have no idea that you were involved with them, and I really paid attention to what this. I think he's Mexican or some Spanish descent. I really love the guy. He's hands-on, and that's what this is all about. You have to find a group where you have little leakage when you give. I think that's the guy, and he goes there and really goes into dangerous zones, because I know Ukraine well, and I know where he was. I follow him quite closely, and I tell you, that's dangerous where the guy goes and hands out the food. So chapeau to the guy, and let's help, George, and let's see what we can do in 2 months to gather the troops again.
Yeah, no, definitely, Alexander. With your help in this community, I mean, I'm so pleased with the community we have here, and we're helping each other, learning together. And again, there's a lot of resources in this room, so your leadership is much appreciated. So,
and maybe if I just can make a comment about the many
please.
Things you passed on to your audience, because we obviously come from this fundamental investing too, which went out of style, and so, but we still believe in it. And so what I recommend is just one book out there, and I'm sure, George, you know it backwards. It's from Bruce Greenwald, Professor Greenwald, and it's called Competition Demystified. And I think it's helpful to the audience to understand what business is all about, because I think most don't. And when I hear all these growth stories, most growth is unprofitable, has a lower return on invested capital than it has cost of capital. And so I think people really have to go back to the study room to understand what is coming here, because I think this is really the long-term shift here.
100%, Alexander. All right, thank you for that. At any rate, we've been going at this for over 3 hours. I go away for a week and a half. I come back. I got into this rhythm for a couple months.
Well, next time you get Marc in here, let's get him in here for a big stint, because I think there's a lot of people that would like to ask him some questions. I had a couple questions for him as well.
We had Marc for 2.5 hours. I mean, this is as good. So no problem there. We will have Marc back again. Don't worry about that. But before closing, I want to ask everyone again. I think it's up on the Nest, and it's also my Twitter feed. It's in Carol's Twitter feed. If you've gotten value from this room, please give to World Central Kitchen. This is extraordinary. The quality of this room, the participants in this room, those who've spoken, those who've not spoken, literally, this is priceless. To have listen to someone like Marc give as much of his time as he did is just unfathomable. So I urge everyone to please give. It's not really much of an ask when you consider, the benefits, that the joy, the wisdom coming from someone like Marc. So with that, we have our next session is on Tuesday at 11 a.m. Eastern. I'm going to in case you guys are wondering why I put these announcements up and I take them down. Twitter has this annoying feature where for spaces, you only can advertise one room at a time. So I put the Julian Brigden announcement up yesterday, but then this morning I was in the mood because it's raining here to do another space. Little did I realize that my friend Marc Cohodes would show up, but I had to take the Julian Brigden down advertisement in order to advertise this room. I will now put it back up. Mark your calendars. It's 11 a.m. Eastern on Tuesday. Julian Brigden, one of the sharpest guys out there. He's been on the right side of transitory, which is bullshit. It ain't transitory. He's been on the right side of the economy, inflation, and the markets. You don't want to miss this. It's kind of similar to what James Ferguson was saying a couple weeks ago from Macro Strategy Partnership, and that was a home run room. The quality of these rooms it blows my mind. And I just, we're just getting better all the time. The audience is getting better. The questions are getting better. Speakers, everything. I mean, I defy, again, we have the best spaces because we have the best speakers, the best content, the best analysis, the best moderation, and the smartest audience. So with that, we're going to close the room. 3 hours and 10 minutes, enough. It's Sunday. Get a life, as they say. And we'll talk to you guys on Tuesday. Everyone take care. Bye-bye. Bye.